Yeah, absolutely. I think all eyes are really on the attention to the phase one trade agreement, which, as you know, was reached under Trump's first term in February of 2020 and had mostly an emphasis on agriculture purchases. All this tech stuff, forced tech transfer, intellectual property theft, all the components we're talking about now, including state subsidization, which is such a huge part of this story, is something that's not included in the phase one deal. So I think the first issue when I think of DC and how they're prepared to respond here, especially since the Senate is dealing with nominations and the House is on recess, is what's going to happen from the administration's perspective. We know that they're re-engaging on the phase one trade deal. I have no doubt in my mind that this is going to bolster their resolve to pull out of the phase one trade deal as soon as USTR Greer is confirmed and completes his review of the deal that they reached in February 2020.
Last week, we had Trump come out and talk about $500 billion for this Stargate plan. What options do they have in the White House when they want to combat something like DeepSeek?
The White House is not where you see these kinds of investments in huge monetary inflows. Obviously, we have that one example that has been in the pipeline. But if you want massive subsidization on par with the Chips and Sciences Act or the Inflation Reduction Act in clean energy, or these chips building Intel or Samsung manufacturing plants in the United States, you really need an act of Congress, and we are months away from that. So the best the administration can do continues to be on the restrictive side: tariffs, export control restrictions, and things that we've seen throughout the Biden administration, and I expect will continue under Trump 2.0.
But if this is real, isn't this just an example that export controls don't work?
Yeah, absolutely, especially the open source component of this and the fact that it's so much cheaper. I mean, this has got to be a core concern of not just the Trump administration, but all the tech universe that has moved into the West Wing. Those are definitely areas where you'd expect to see them really try to gin up ideas and probably come under pressure from President Trump to gin up further ideas to advance this.
It also raises a question about H-1B visas, when if you want sort of an open source, you also want to be importing talent who has expertise in specific fields related to large language models and artificial intelligence. Henrietta, as we hear about all of the deportations, the roundups, et cetera, by ICE, how much is there discussion about reform and potentially amending some of the H-1B visas and other aspects that affect the U.S. workforce?
This is the perfect question, and it's sort of an open wound now in Republican circles. You have one wing of the Republican conference who wants to raise visa fees, make it more expensive for migrants to come over to the United States, for corporations to hire H-1B visa applicants, to restrict the numbers of H-1B visas that are even doled out across the pharmaceutical sector or the banking sector, the technology sector. And then you have another group that very much wants to expand this access. And that immigration fight is one that we're seeing play out in this broader conversation about reconciliation instructions. Republicans only have a chance to pass legislation this year. Going into 2026, you're not going to see legislation pass because we're going to be deep in the primary season and the general election of 2026. They have to do that this year. They're meeting in Doral this week on the House side to come to any kind of consensus they can here. I think the number one takeaway I have is that they need money, and therefore increased costs of bringing in high-skilled workers is almost guaranteed to be part of either the first reconciliation bill or the only reconciliation bill Republicans pass this year.
Henrietta, there are different warring camps within the Trump administration. We've talked a lot about that. You've got some of the big tech oligarchs that some people talk about on one side, and then you have some of the more populist members on the other. Do we have a sense of who's winning out so far?
Honestly, the deficit hawks are the ones that are winning out. I think it's a mistake to think about this in terms of just who in the White House is winning. Your real problem is the House Republican Conference, where you have little pockets of opposition to almost everything that's being proposed. So this grand thinking about who's going to win in the White House, I think misses that we have 18 members of the SALT caucus who won't vote for anything that doesn't hike SALT by a material amount. 20K is no longer going to cut it. Then you have the 30 members or so that support all of the clean energy tax preferences in the Inflation Reduction Act. You have other members who want to expand the child tax credit and keep all the SALT revenue. So these sort of like high-end conversations about what is the future of the party are going to get lost the second we start writing the tax bill, which is starting really this week as they try to come up with what the budget resolution is going to look like. So I'd encourage investors to get even more granular than that.
Nothing easy about any of this. Henrietta, appreciate your time. That's Henrietta Trace there of Vader Partners. The SALT lobby already causing some problems, right?
Oh, absolutely. I mean, but at the end of the day, they have all the leverage, because if you don't have a raise of the cap and TCJA goes away, then it becomes unlimited. But to the point she's making there, every single representative has become a king or queen. They can make any one issue or do or die issue. That is because the Republicans in the House have one of the slimmest majorities they have ever dealt with, and they're not in agreement on a vast majority of these issues.
The tax is not part of the story this morning, that's for sure. Equity futures down across the board, recovering just a touch here, Lisa. We're negative by 2.3%.
If they're haggling over SALT taxes, how do they talk about, you know, revolutionary changes in AI and how to support that?
Much, much bigger issues.
Yeah, I'm just wondering.
They don't.
You know, yeah, that's part of the issue.
Up next on the program, Mandeep Singh of Bloomberg Intelligence, as worries over China AI startup DeepSeek sparks a global equity market sell-off.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
This probably wasn't the outperformance in small caps you were looking for. Certainly weren't looking for it to look like this. But you're getting that relative outperformance now because the major tech names are getting hammered. Manos will go through the names in just a moment. The Nasdaq is lower by 3.8%, as low as negative 5%. earlier on in the session. With your morning movers, let's cross over to Manus Cranny. Good morning, Manus.
Jonathan, good morning. Yeah, the Nasdaq was down 5% at 6 a.m. when you came to air and when I went off. What has DeepSeek done? It's really chipped away at the moat, that perception of a moat around NVIDIA. Every 1% lower in this stock is $35 billion worth of market cap. So you're looking at somewhere in the region of $380 billion worth of market cap wiped out. It's that impenetrable moat. Right now, what you're seeing is the risk is a lower cost option, so it's pervasive, not just within the chips that you use, the energy that you need. You've touched on all of these issues. Let's just take it forward and have a look at how that's permeating around. Meta, of course, they doubled down on Friday, didn't they? $65 billion in terms of CapEx. Will they need to do that? What's going to happen? They have, Danny and I were looking at this morning. They set up 4 war rooms to understand what DeepSeek is doing. How this high flyer, let's say, is producing lower cost of training. Will Mark Zuckerberg put on a suit again? That's the question Danny asked this morning at 3 a.m. But it is about their Llama assistant. What is it going to mean for that? Microsoft comes in down 6% here, Jonathan. Again, they put $13 billion into OpenAI. $13 billion. Nobody's saying that that's a squandering waste of money at this stage, but the numbers are simple. If we can trust this DeepSeek, 97% less computing power at 50 times lower the price. Is that subsidized? Is that real? What's the veracity? There's lots of questions we can ask around that. But right now, you're questioning that $13 billion investment into Sam Altman and OpenAI. There you go. Jonathan.
Thank you, Manus. That stock gets hammered. We're down 6%. I think Meta's got to drop more than 3% before Mark Zuckerberg puts on a suit. How about you, Bremo?
Well, I don't know. I mean, he has his now necklace brand, so I think, you know, that kind of carries him a long way before he gets that suit back on.
I don't think that's happening anytime soon. Under surveillance this morning, American tech exceptionalism put to the test as China's AI startup DeepSeek rattles global markets. Tech stocks leading the decline, on track for a $1.2 trillion market cap wipeout if losses hold. The Nasdaq down by 3.9%. The tech stocks over on the Stock 600 over in Europe getting hammered as well. ASML, the big victim there.
Because this is basically just putting an absolute wrench in the entire supply chain when it comes to semiconductors. Even if they are doing this off the less advanced chips, they are doing it off of open source AI as well. You might need not as many of these semiconductors as potentially everyone thought. All this investment going in, is it almost too much? Do you not need it? And this is going to be a big problem.
Yeah, it also shows that, frankly, people are looking for the next squirrel to come around to give them sort of a new narrative. And basically, everyone's been hinging their shingle on this one idea that everyone's just going to load up on chips, and the more the better. And this sort of undermines that.
You think this could just be a squirrel?
I don't think it could be a squirrel. I guess, how much have people been chasing that squirrel to elevated valuations? The idea that this is all in, you can't spend enough on chips. Does this undermine that? And now we've got a new squirrel.
Jensen's been in China for a while, hasn't he? Makes a lot of sense why he was there and wasn't in Washington, D.C.
Yeah, I mean, it also raises a lot of policy questions. What is the appropriate regulation of some of these chips? How much is the competition shifting to China? How much is this actually is some technology that the U.S. can adapt? Or is this really going to stay in China?
Based on what we know so far, you can make the argument, I think this morning and others have, that it's led to greater efficiency out of China.
Well, out of China, that can be deployed in the U.S., which could potentially be beneficial for a number of sectors. Look, we're trying to figure out what the implications are of something that we've known about for a hot second, right? And there is this feeling that it is a revolutionary shift. Nonetheless, it is one that people have been expecting. So that, I think, is the more interesting takeaway, how disruptive it actually has been.
Let's turn to U.S. policy. President Donald Trump's tit-for-tat trade war with Colombia didn't last too long. Trump announcing sweeping tariffs on the South American nation over migrant deportations, then abruptly backing off as soon as Colombia agreed to accept deportees. Is this a model for the next year or so?
This must be one of the smallest or shortest trade wars we've seen so far. But what did happen is Trump was willing to just basically throw around the weight of the United States, and he got what he needed at the end of it, which is why I think a lot of other countries, say Canada, Mexico, maybe the European Union, are looking at this and saying, wow, this is what we have in store. Now, the sanctions, the tariffs did not come in place But Caroline Leavitt, the press secretary, made very clear last night, they're fully drafted, and she said they will, quote, be held in reserve.
February 1 is only just around the corner. It's not just about Colombia. It's about Mexico, Canada. It's about China too, and it could be about Europe as well. Taxes won't be straightforward either. President Donald Trump reiterating at a Las Vegas rally his campaign promise to eliminate tax on tips, telling the crowd, quote, if you're a restaurant worker, server, a valet, a bellhop, a bartender, one of my many caddies, or any other worker that relies on tipped income, your tips will be 100% yours.
So he says, let's see what Congress says. Henrietta Trey's just basically walked us through how difficult it's going to be even just to extend TCJA, what the SALT caucus wants, how difficult is it going to be to say something like there's going to be no tax on tips. And also, you have to start defining this. Who else can be paid in tips? Could one of your bonuses just be a tip now that you don't have to pay tax on? And also, what does this actually mean for the underlying economy? If you work at a grocery store and say you work at a cash register, but now your friend who's a waitress is not paying tax on tip, does that mean there could be a shift in the economy on the jobs people want to go after? This has a lot of complications, and I'm not sure they're going to get it done this year.
Which, again, goes to the heart of why people are looking for squirrels. Because right now, the actual nuts and bolts are not very clear, and you can tie yourself into knots trying to understand exactly what will get through. It's not going to give any clarity, but it does seem like clarity that, oh my gosh, there's a revolution in AI. Let's talk about that. I think that's the reason why we're talking about squirrels.
Let's get back to that. Let's get back to that big squirrel. It's a big one. Let's turn
not
back
just a squirrel.
to one of our top stories. Global tech stocks under pressure as China's AI startup DeepSeek continues to rattle markets. The Nasdaq now down by 3.8%. US chip giant NVIDIA on track for its biggest market cap wipeout ever. It's down 12% currently as investors reassess the Western AI firms' valuations and competitiveness. Joining us now is Mandeep Singh of Bloomberg Intelligence. Mandeep, good morning, sir. It's good to see you. Yeah. This came from Jordan Rochester of Mizuho just moments ago. In short, it's hard to fade this as it puts into doubt the NVIDIA story, the pricing power of US tech AI, which isn't cheap, and comes at a moment where consensus long US exceptionalism trades are looking very fragile. Mandeep, let's start with a simple one. Is this the real deal?
I mean, look, when it comes to open source, this is the moment. And we have had, Meta Llama as a model that's open source. Companies were adopting it, but it never was talked about in the same league as ChatGPT and Anthropic and, some of the other models, Google Gemini. In this case, what they have shown is not only is open source comparable in performance, it's far more cheaper. And that's where, you have to take that into account. I mean, OpenAI is charging, $200 a month for their O1 Pro model. How do you justify that cost now, given your open source model is almost comparable in performance?
Danny Berger raised this question a little bit earlier on in the program. I'd love your view on it. Does that greater efficiency lead to greater demand or not? Because certainly this morning it looks like for NVIDIA, people have made their decision on which side of that argument to come down on. What side of the argument would you come down on?
I mean, it should lead to greater demand, and I'm in that camp. The problem with NVIDIA is the expectations are already so high that the stock will be driven by how much the estimates can be revised upward. And so when you have a moment like this where everyone is questioning the pricing of these chips, I mean, look, NVIDIA is the one that gets impacted the most because their gross margins obviously will get impacted in this case. So net, I think demand-wise, we should be good. I mean, a lot of this data center capacity is fungible. So even if they're not using for training, they could deploy it more for inferencing. But, Meta raised their CapEx last Friday. There was Project Stargate announcement. All this points towards more dollars going into generative AI. And so I don't think that, the DeepSeek model changes that, in terms of what companies are allocating their CapEx. Maybe you'll find out more during the earnings season, this week.
There's another element of this story, which is how did China get to this place? And a lot of people, so far, the narrative has been that they simply did more with less, that they got these chips that were restricted and that were less powerful, but they were more innovative. You kind of are challenging that thesis. What's your take on this?
Well, so when I look at Meta Llama as an open source model, it's been out there, Llama 3, Llama 4, they have open weights, in terms of the models, and that's the secret sauce. You talk to OpenAI, they don't want to open source that, Google Gemini. So the fact that you have one model which is comparable to all the others that's been open source, and, everyone could use that model and then keep improving it. OpenAI talked about O1 model, being kind of driven by scaling around inferencing. Now that's where what DeepSeek has done, is they have used the feedback from these models to improve the data that's being fed to their model, and the baseline was still the open source model, but they were able to improve the, the inner workings of the model, the next version of the model, based on the feedback. And that's where, they were quite creative in terms of using an open source model as a reference.
Just to sort of highlight your point, there has been a long time cliche that the United States innovates, China replicates, and Europe regulates. Are you saying that this is more of that essentially the innovation came from the US and that China took some of what it learned in the open sourced models from Meta in particular and just built on that?
I mean, look, they were not the first movers. When it comes to the ChatGPT moment, it was OpenAI and, Anthropic. These two companies had the models first. Everyone else, Google obviously had their own in parallel. Everyone else has leveraged the open source model to an extent. And that's why, Meta's approach was, we want to create an ecosystem. That's why they open source it. I mean, the Chinese models, look, there are some nuances in terms of the paper that they have around this. And clearly, as I said, they've done a lot with the reinforcement learning, human feedback element. So they have done a lot around improving that open source performance and bringing down the price. That's the real innovation, is the hardware efficiency and kind of lowering the inference price. I mean, the fact that OpenAI is charging so much higher, $200 a month for their latest model, and DeepSeek is saying we can do it at a fraction of the cost. So clearly, that hardware efficiency is a theme, but I would say the baseline was provided by the open sourcing, and then clearly they built on that.
Mandy, people I talk in Washington are concerned with China getting ahead of the United States. We'll say things like, China's a year or two behind. What's the gap now?
Well, I mean, I think what this paper shows is they are more creative when it comes to, the less hardware that they have available, both on the training side and the inferencing side. And in terms of widespread deployment, I mean, you could argue, they have the local apps that leverage these models, and, it's a ChatGPT equivalent. But will it get broader adoption? I doubt, because of all the concerns that even TikTok had, but it's still the #1 downloaded app here in the US.
Does this basically show, though, that export controls don't work?
I mean, we don't know the exact kind of training cluster that was used. Some people are saying it was $6 million and 2,000 GPUs, but others are saying they had a lot more. So we don't know exactly, but the paper that they have given out clearly shows that when it comes to inferencing, their costs are far lower. And training is a one-time thing. Yes, you have to train your models every 3 months, 6 months, but inferencing is the bigger opportunity when it comes to deploying across, a family of apps to billions of users. So that's where I think lower pricing really helps adoption.
How much does this lift the bar for some of the tech giants that are going to be reporting earnings this week?
I mean, look, Microsoft, Google, like I said, Meta raised their CapEx. So what they have to tell the street now is, let's say this is real in terms of DeepSeek bringing down the price. How do they plan to compete on that in terms of using that innovation and incorporating it? And then really, what does it mean for 2026 and 2027 CapEx plans? Because we know this year they are raising the CapEx. I don't think they are walking that back. But then NVIDIA is driven by what happens in 2026 and 2027. And that's where I think there are still question marks.
So Mandeep, can I just jump in? They might not walk it back. Will investors put the pressure on them to do just that?
Well, so I think compute capacity is quite fungible. So let's say for training, you don't need as many GPUs for the next version. So you can deploy that for inferencing, because there is a real demand for all the AI to be incorporated in current apps, current websites. So from that perspective, I do think they can say, okay, in the case of Microsoft, the cloud revenue will accelerate. Google cloud revenue will accelerate. Meta, I don't know, because they don't have a separate cloud business, but they can still show that in the ad monetization. So all these apps have, places where they can deploy AI.
Mandeep, appreciate your time, sir, as always. I have no doubt we'll be talking again before the week is out. Mandeep Singh there of Bloomberg Intelligence. This is something that we've been talking about for quite a while. The biggest risk, for the likes of NVIDIA, would be the biggest spenders on that company, their biggest clients, their investors losing patience with them, with the CapEx spend coming out of companies like Meta. And I imagine there'll be a lot of questions on the call about that in the next few days.
And I think that, to Mandeep's point, it's not necessarily for the CapEx spend this year. or next year. It's to look at where that CapEx is going to go at a time where you potentially could do more with less.
We've got some pushback from Dan Ives of Wedbush. He says the Bears dominated the weekend narrative and are trying to scare investors that this is a black swan moment. It's actually the opposite. It's bullish for hyperscalers, NVIDIA, and use cases.
Essentially, the idea that it will actually increase and speed up the adoption of artificial intelligence and increase efficiencies across the economy. Again, that points to this question of the incredible outperformance of small caps this morning.
The Nasdaq is down by 4%. Some relative outperformance from the Russell. Let's give an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. South Korean prosecutors have charged President Yoon with insurrection for his attempt to impose martial law last month. Yoon is the first sitting Korean president to be charged while in office and can be detained for up to 6 months while his case is reviewed. The indictment comes just before Yoon was due to be released from detention on Monday. Bitcoin sliding over the weekend and again this morning, down almost 5% after President Donald Trump created a working group to advise the White House on crypto policy last week. The drop also tied to the close correlation between crypto and other risk assets, which, as we know, have been selling off with that DeepSeek advancement. Bitcoin is still up more than 50% since Trump's election victory in November. The Kansas City Chiefs and the Philadelphia Eagles will meet in New Orleans for Super Bowl 59. It's a rematch of 2023's big game that will determine if the Chiefs can achieve the first ever Super Bowl three-peat. The Chiefs once again beat the Buffalo Bills at Arrowhead Stadium, becoming the first team to advance to the Super Bowl 5 times in 6 years. The Eagles trounced the Washington Commanders at home and will make their 3rd Super Bowl appearance in 8 years. And that's your brief, John.
Danny, thank you. This is just a convenient way of getting TV ratings up. Make sure the Chiefs get there. Am I doing this right?
Yeah,
either
way, although if they always win, to Anne-Marie's point, is that really going to increase ratings?
Are they winning because the referees are letting them win? Is that what it's about?
Oh, I don't know.
No, I'm asking. It was a question, not an accusation.
Are they even real? Maybe they're just artificially intelligence-generated, images.
I find that NFL is all about marketing anyway.
Yeah, of course.
Yeah.
You mean that it's like a little bit of action and
yeah, like 4 quarters. They don't really play much sport.
I know
and there's a
you
commercial.
feel about it,
and
yet you watch it.
So there you go.
I watch college football.
Oh,
the difference.
Oh, yeah.
Yeah, there's an affinity to your local team. They stay in one place.
Who's your local team?
Not just mercenaries.
No, they actually
Alabama, Roll Tide. Up next on the program, DeepSeek, roiling global markets.
There are a lot of question marks. Investors, I think everyone needs some time to digest exactly how real this is, what are the impacts, how it can be sustained. I don't think anyone quite saw this coming, but it really does accentuate that need for diversification.
Equity futures here down by 2%, recovering just a touch. That conversation's up next.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Equity futures on the S&P down across the board here. We are lower by more than 2% on the S&P 500. On the Nasdaq 100, we're negative by 3.7. The bond market receives a bid. Yields are lower by 10 basis points on a 10-year 4.52. And the surveillance this morning, DeepSeek roiling global markets.
There are a lot of question marks. Investors, I think everyone needs some time to digest exactly how real this is, what are the impacts, how it can be sustained. Valuations are really extended. So coming into this year, there were already going to be vulnerabilities. Now, I don't think anyone quite saw this coming, but it really does accentuate that need for diversification.
So here's the latest this morning. Chinese AI startup DeepSeek sparking concern over US tech dominance. Nvidia set for its biggest market cap drop on record if the current move holds. Jim Bianco of Bianco Research writing, we start the week worrying that Mag 7 technology is outdated and slow, thanks to DeepSeek. And while you can argue that it does not impact the S&P 493, Russell 2000 or the broader economy, it is a big market event. Jim joins us now for more. Jim, welcome to the program, sir. First question, is this a big game changer?
It's a game changer for the Mag 7 stocks in that they're going to have to rethink what their, capex spending is going to be, and maybe even where they're going to go forward from here. Is it a big game changer for everybody else? Is it a game changer for the economy? No, it's not. But the Mag 7 stocks are 34% of the S&P. So if Nvidia's got a problem, maybe people get up and go to work and they don't have to worry about their job. But anybody who owns anything that is related to a broad base of the stock market, they have got a concern because of the dominance that these stocks have over everybody's investment returns.
Jim, there are a lot of questions about exactly how far DeepSeek's innovations can go in terms of really transforming to the negative NVIDIA's prospects. There is a larger takeaway, though. From your perspective, what does this say about how concentrated valuations got over the past year?
It's a direct mark on how they've gotten so concentrated, in that these 7 stocks, as much as we like to talk about the economy and the stock market and investment ideas, we're all tied to these 7 stocks, and in particular, we're all tied to NVIDIA. And whether or not you actually even know you own it or don't own, and even if you don't own it, if this morning witnesses, it impacts not only your stock investments, but even the algorithmic response you're seeing out of the bond market with the big rally, because the stock market is down a lot. So it matters to everybody, even though it may not change the economic or fundamentals underlying some of the assumptions that they had just on Friday.
Well, Jim, to that point, when you talk about algorithmic read-through to the bond market, is that really what you attribute some of the rally that we're seeing this morning in U.S. Treasuries? Or do you think that this actually opens the door to the Federal Reserve having a more dovish message on Wednesday?
I don't think that it should open the door to the Fed. Nothing has changed. There's been no data out. The fundamentals and the belief that the Fed is going to hold on Wednesday still applies, and that they are going to hold on Wednesday. And so, about the only thing that's going to possibly change on Wednesday, I hate to say it, is that, they'll hold, and then President Trump will disparage them. It'll be a return to pre-pandemic levels like Powell has been hoping for 5 years, except not in the way that he was hoping it would get.
Is there a concern, you think, in the market about Fed independence? Because what you just said there, everyone's expecting Trump to disparage Jay Powell.
No, I don't think there is a big one, because I think that Jay Powell is, got a strong enough backbone that he understands this is going to happen, and he's not going to let it affect the policies that he wants to push forward from here. Now, whether or not that will affect Fed independence on who the next chairman is going to be, because presumably he is not going to appoint Powell, that's an open question. But for the short term, while Powell's still there, I don't think it is.
But don't you think that potentially Trump might start then dishing out some names, and you have this idea of what Scott Bessent, the soon-to-be Treasury Secretary, talked about at one point on the campaign trail as shadow Fed chair?
Yeah, and I've talked about that too, and I think that we're probably going to get a shadow Fed chair. But I think that was going to happen either way, whether or not the Fed, wind up cutting rates or not cutting rates, or wind up having a giant market response, in late January or not. We were going to probably on the road towards getting that shadow Fed chair, probably in the spring or summer.
Hey, Jim, appreciate your thoughts. Jim Bianco there of Bianco Research. Jim's talked about that a few times. That's got to be the biggest risk for the Federal Reserve.
Yeah.
For the chair, you completely remove his ability to deliver forward guidance if you have a shadow Fed chair over the next year.
And a lot of people are expecting this to be the case, with people already trying out, and we've talked about that and raised that question. This sort of tit for tat and the return to the past norms, how much does that actually affect the way that Chair Powell communicates in these news conferences, when clearly the actual pace of policy isn't even at issue right now? It's just simply the political maneuver.
I mean, arguably, he's a lame duck, and we just saw this play out when it comes to the presidency for 2.5 years. Donald Trump was making moves in the market. Everyone was paying attention because it didn't really matter who was sitting at the White House at that moment.
The market making moves right now. The Nasdaq is lower by 3.7%. Up next on the program, Victoria Fernandez of Crossmark, Angelo Zeno of CFRA, Neil Dutta of Renmac, and Oksana Aronoff of JP Morgan Asset Management from New York. This is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
I am positive because it is definitely a change in tone.
There is a lot of optimism everywhere about what the U.S. could do.
There is reason for optimism. There are green shoots that people are able to point to.
The U.S. is at the epicenter of all discussions.
As America goes, so goes the world.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
All that Davos confidence, getting some ice-cold water poured over it this morning, in a market at least. Check out this calendar. Let's go through it together. The tech earnings over the next several weeks just got a whole lot more important. You'll hear from Meta and Microsoft on Wednesday. You'll hear from Alphabet next week alongside Amazon, then the big one at the end of this month. Next month, NVIDIA. These are huge, given where the NASDAQ is right now, down by 3.8%, and the questions that will be asked about how much those companies, Meta and Microsoft, are spending on that company, NVIDIA.
They already were huge because the big tech names that you just mentioned are what's been driving the rally that last week saw the S&P rise to a record level yet again. Now you add on top of it DeepSeek, a Chinese startup that really revolutionizes the efficiency of some of the artificial intelligence models, and suddenly a real question about whether the spending was for naught at some of these companies.
Well, The Information had a story out yesterday on how Meta has been scrambling and serious concern from some of their leaders that they are behind and they are in panic mode. Their leader for infrastructure directors said they are concerned the next version of their flagship AI won't perform as well as DeepSeek. So the question I have is this gap between Chinese tech and American tech. There's been this consensus that at least the U.S. is still a few years ahead. Is that still the consensus today?
Do you want some good news? Bonds are rallying. It's the good news this morning, right? They're at least working. We're down by 10 basis points on 10s, down by 8 on 2s.
Yeah, what did we just hear from Jim Bianco? Algorithmic selling or algorithmic buying just simply on the downdraft that we're seeing in risk assets. I do wonder whether it opens the door, though, to a more dovish tone from the Fed, because everybody owns NVIDIA one way or another, and essentially where the stock market goes, so too does sentiment, and sentiment will be hit from this.
Sentiment getting hammered so far this morning, that's for sure. Coming up this hour, your lineup looks like this. We'll catch up with Victoria Fernandez of Crossmark Global Investments as investors await big tech earnings. Angelo Zeno of CFRA as China's AI startup DeepSeek threatens U.S. tech dominance, and Neil Dutta of Renmac looking ahead to the first Fed decision of 2025. We begin this hour with stocks lower, much lower. Global equities slammed as investor worries over China AI startup DeepSeek lead to questions about U.S. tech leadership and valuations. Victoria Fernandez of Crossmark Global Investments with this to say: we expect high levels of volatility as markets try to find a broader footing than the highly concentrated environment of just a handful of tech names. There appears to be little room for error as we enter the new year with elevated sentiment levels and extremes in valuations. Victoria joins us now for more. Victoria, welcome to the program. You, of course, wrote that before this big shakeout in the equity market. Can you share with us your thoughts this morning as to whether you really believe this is a threat to U.S. dominance?
Yeah, I don't know if
I would say threat to U.S. dominance, Jonathan, but I do think it's a threat to the expectations that we had coming into this year, that we were going to have this extremely strong growth for this year, and that was going to lead the stock market higher and lead bond yields higher. So there is a threat to that component. And what does that mean in regards to the Fed? Obviously, the tech game can turn on a dime. We've seen it over the last 24 hours. I do think that the U.S. is probably still a little bit ahead in this race, in this tech race, because of all of the investment that we have put in there. But it looks like the story is China is not as far back as what people thought. They are much closer. So it leads to some questions, and obviously we see that response in the markets today. And it also leads to the concern that the U.S.-China trade wars and the restrictions on chips and things like that could get even more heated, which will bring more volatility to this market.
So, Victoria, let's go through the individual components of the market breakdown in equities. And you can share with us where you'd be constructive and where maybe you'd be hands-off. So you've got the likes of NVIDIA, the obvious place to start. That gets hammered. How many chips do we actually need to make this kind of progress? And then you've got the big spenders on those chips, the likes of Microsoft and Meta. They're getting some real competition. They've spent a lot of money. They're declining this morning. And then you've got the energy names as well. So the whole ecosystem's being questioned. The utilities that ran up aggressively over the last 12 months are getting hit this morning too. What would you be looking to pick up the pieces with, Victoria? What would you be willing to say, you know what, I'm going to stay away for the time being?
Yeah, so as you know, at Crossmark, we've actually been underweight a lot of these names versus the market over the past 9 months to 12 months, because we were taking a little bit off the table as things went along. So I think that's what you, hopefully have done. So your position is a little bit less. I would not go in and pick names up right now at this point in time. I would let this shake out a little bit, unless you want to make a very tactical move and go in and be trading, every few hours or every day in these names. If you're a long-term investor, let this shake out a little bit. You're right. The whole ecosystem, from utilities to chips to the support to the software, have all been rattled here. So I would actually look at some of the other areas of the market. I would look at some industrials. I would look at some financials and see if you could find some areas there to put your money to work while you let these elements kind of fade a little bit.
How does it influence, though? And there is still a lot to be learned in terms of how broadly applicable and how truly revolutionary this is. But Victoria, how much does it change your thesis on the energy space in particular at a time where already Donald Trump wants to increase the U.S. infrastructure and keep energy prices low?
Yeah, so obviously the energy names that are being hit today, there was such this huge expectation that demand would increase because of AI, that we were going to be building lots of data centers. We were going to need all of this power coming from these companies, and that tone has shifted. When you look at the oil companies, and you look at some of the other energy companies, though, we've been expecting that the price of oil is going to come down. We know that that's what this current administration wants to do, and that was going to be difficult for some of these companies. So we were already shifting and looking at more of the midstream, the transportation components of the oil and gas and the energy companies versus maybe some of the upstream or utilities themselves. So I think you can make that shift. And then if things change and the expectation starts to move higher again, you can add a little bit more back to that part of your portfolio.
There's another aspect of the trade this morning, and something Jim Bianco pointed to, is simply algorithmic buying in the bond space. Does it change your view with the Fed's tone this week, given the fact that there was so much expectation around growth and even potentially a resurgence in inflation? Does this put a damper on that, given that where the stock market goes, so too does sentiment?
I think it does a little bit, Lisa. I mean, we've talked over the last few weeks about that rise in the longer end part of the curve, that it really wasn't due to inflation expectations. Break-evens have held pretty steady. It was due to term premium, to the growth that we were looking for. I mean, IMF is saying 3.3% growth globally over the next couple of years. I have a feeling that'll probably come down if the AI story continues the way it is today. So if growth expectations are lower, that's why you're seeing that longer end part of the curve come down. And that steepness of the curve that has been a benefit for financials and for banks will start to go away a little bit. So it does shift the story. And I think it actually gives the Fed a little bit more room to take this pause because volatility is continuing to go up. Look at the VIX today. It's up, what, 30% just this morning? And it was a net speculative short position on VIX over the weekend. So I think we'll see a lot more volatility. That's going to give the Fed more time to pause.
Victoria, you have to forgive me. My head's kind of spinning here because there are these competing narratives that are hard to get my head around. You've got the AI revolution that may or may not transpire in short order as a result of greater efficiency. You have a Fed that's grappling with growth expectations and just where we are currently in the economy. And then you have politics overlaying on that, which is part of the reason why people were saying that bonds were selling off, that the deficit is just increasing dramatically, and that at some point the bond vigilantes are back. Which story are you paying most attention to? What's your sort of lodestar at a time of so many cross currents?
Yeah, you're right. I mean, there's different stories you can look at, and really depending on what you want your story to be, you can find the right evidence to back that up. For me, it's obviously the bond market. Not that we say the bond market's always right and the equity market isn't, but the bond market is giving us a lot of clues as to what's going on in regards to inflation expectations, in regards to growth expectations, in regards to debt issuance coming in. Obviously, that's tied to the political element and what we're going to see there. What is issuance going to look like? Is it going to be more bills? Is it going to be longer term coupons, which I think it probably will be? And what does that mean for interest expense? It's all tied together. But I'd be watching the bond market to see where yields go and how those bond vigilantes actually come in and how long they want to play this game. To me, that's what's going to drive the equity market, obviously along with earnings.
No sign of the vigilantes this morning so far, at least. Victoria, appreciate your time. Victoria Fernandez there of Crossmark Global Investment. Check out the bond market across the curve, 2-year, 10-year, 30-year, down 9 basis points on a 30. On a 10-year, down about 11. On a 2-year at the front end of the curve, we're down about 8. So a rally across the board in fixed income.
It should make the auctions that happen later today and later this week a lot better. There's $69 billion of 2-year notes and $70 billion of 5-year notes being sold later today, 7-year notes being sold tomorrow. Right now, a really good time to be selling. So maybe this is actually really beneficial for the U.S. Treasury Department, and they could send a thank you letter over to China.
Yes, to DeepSeek. It's a real confidence shock, isn't it? You think about some of the consensus trades into this year, long the United States, long U.S. equities, concentrated risk there in big cap tech. We're seeing that unravel today. Long the U.S. dollar, saw that unravel somewhat last week. And then in fixed income, worry about higher inflation, yields are going to creep higher, treasuries lower, everything just turns upside down this morning.
Yeah, but it also shows how much people really are just following a narrative without digging in. Because ultimately, a lot of people were saying that AI couldn't really lead to any kind of revolution in other sectors unless it was much less energy intensive. So this is actually a gift to so many people who are saying that at the same time that it really just highlights how expensive a couple stocks really had gotten.
Oh, big time, and how one-sided this market had become. A lot of that unraveling so far this morning. We'll see if it sticks. The opening bell about 1 hour and 20 minutes away. With an update on stories elsewhere this morning with your Bloomberg Brief, let's cross over to Danny Berger. Hey, Danny.
Hey, John. Just to revisit that, Chinese AI startup DeepSeek driving a global tech sell-off. NVIDIA down nearly 12%, TSMC nearly 11%. Its new model demonstrating performance similar to the world's top chatbots without that high price tag. It's built with open source tech and challenges the notion that China's AI technology is behind the U.S. A geopolitical scrimmage between the U.S. and Colombia. President Trump walked back his tariff plans on the country after reaching a deal on deported migrants. Colombia's president initially refused to allow military planes with migrants to land because of objections on the use of shackles. The White House declared that Colombia had agreed to all of President Trump's terms and will provide, quote, conditions of dignity. In sports, Jannik Sinner defended his title at the Australian Open, beating Alexander Zverev in the men's final to win his 3rd Grand Slam. The world #1 player dominated the match, winning in straight sets without facing a breakpoint. And in the women's tournament, a big upset. American Madison Keys upset top-ranked Aryna Sabalenka in a thriller to win her first ever Grand Slam title. And that's your brief, John.
Hey, Danny, thank you. Appreciate it. More from Danny again in about 30 minutes' time. Up next on the programme, the Morning Calls Plus. Angelo Zeno of CFRA as jitters over China's AI startup DeepSeek rips through equity markets worldwide. From New York City, this is Bloomberg.
is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Equity futures on the S&P negative by 2 percentage points. We're down by 3.5% on the Nasdaq 100 with the opening bell about 1 hour and 15 minutes away. Let's get you some morning calls. Your first call from Raymond James, reiterating its strong buy on Meta. The team noting DeepSeek's innovations could lower model training costs for AI hyperscalers. Your second call from Citi, reiterating a buy on NVIDIA. With DeepSeek in mind, they say we don't expect leading AI companies would move away from more advanced GPUs. The stock is down this morning, still negative by 11.6%. And finally, Cantor Fitzgerald reiterating its overweight on NVIDIA, calling the DeepSeek announcement bullish for the AI industry. The argument essentially being, Lisa, that as efficiency goes up, demand's not going anywhere.
That essentially it'll actually increase demand if a number of companies can play around with and figure out how they can adapt AI models to potentially make themselves more efficient.
Sticking with tech this morning, Nasdaq futures well off session lows. They were down by 5% at 6 a.m. Eastern time, which is just amazing. US tech leaders under pressure ahead of earnings as the Chinese AI startup DeepSeek's latest model boosts cost effectiveness while running on less advanced chips. Angelo Zeno of CFRA joins us now for more. Angelo, welcome to the program. What a time to catch up with you, sir. So Meta comes out and says it's going to spend north of $60 billion on CapEx this year, and then DeepSeek comes out and says, slow down, maybe you don't have to spend that much. Angelo, is this good news or bad news for the likes of Meta?
Yeah, I mean, it's amazing what a couple of days will do, right? But yeah, I mean, as far as kind of what this means specifically for Meta, you know, I don't think it necessarily changes the story for Meta very much, to be honest with you. I think, you know, the company kind of just, you know, they announced their CapEx plan on Friday, the 60 to 65 billion. I think they're going to reiterate that when they report later this week. And, you know, when we kind of think about some of the hyperscalers out there, we continue to think that they're very well positioned, you know, given the free cash flow generation, kind of their business models and their ability to continue to aggressively, you know, spend on some of these next generation tools out there. But, you know, whether or not, you know, this allows them to potentially kind of lower their cost of modeling or what have you remains to be seen. But, you know, I think at the end of the day, I don't think it changes doesn't change the story much specifically for Meta. I think kind of some of these chip makers, that might be a little bit of a different story, though.
Angela, it might not change things for management. I wonder if it changes things for investors. Do you think they'll carry on supporting the amount of spending that this company's doing?
I mean, listen, I think they're going to have to tell a really good story in terms of the monetization of AI when they do report on Wednesday. I think the investors are going to kind of want, you know, more clarity on how they plan to monetize AI. I think, you know, the ROI potential is there for this company. Maybe not as clear as for some of the cloud companies out there and kind of the need to increase capacity and what have you. But I think it's extremely important for Meta on Wednesday to really kind of tell a clear-cut story on how they plan to monetize AI. You're gonna have Llama 4.0 ramp here in the first half of this year. You know, clearly Meta AI has seen kind of a significant increase in its kind of installed base. So there are definitely ways that, you know, we think that they can kind of monetize AI here over the next couple of years. They've just got to make sure that they tell the story properly there for investors.
Angelo, how worried are you about a late 1999 moment where suddenly we have valuations on a story that actually is true, that there is a revolution going on, but that we don't fully understand what it is yet and who the winners actually will be? Do you think that there will be some more disruption that will be profound to the rally that we've seen so far of big tech?
Listen, I think you'll continue to see a lot of noise out there. I think the game's going to continue to change as far as kind of the AI ecosystem is concerned. As far as where valuations are concerned, what we do like about tech actually is, the valuations are not extreme at all. We do think for the most part, big tech, you've got growth at a reasonable price among, kind of, let's call it the Mag 5 names that I cover within tech and comm services, not taking into account Amazon or Tesla within kind of that ecosystem. And you kind of, again, you look at those valuations out there, you look at kind of the secular drivers specifically tied to the cloud and digital ad spend, that continues to remain intact. And I don't actually think kind of a lot of this monetization AI potential is embedded in a lot of these kind of stories for these names. So I'm not necessarily worried about the valuations here. Again, I think as far as the chip industry is concerned, what you're going to see start happening is you're going to potentially start seeing multiple compression on any sort of rallies here, because I think there are going to be some concerns about kind of the magnitude of spend as we go into 2026 and 2027, not necessarily 2025.
All of that being said, Angelo, there was this theory out there that essentially if this efficiency story was correct, with artificial intelligence, it would be the non-tech names that would benefit that much more, simply because they wouldn't have to be as heavily cost-driven as they have been in the past. Does that concern you? Do you think that we're closer to that shift, that threshold in who benefits from future advancements?
Yeah, I mean, listen, I think that the story is going to continue to change in the market here in terms of who potential winners are, where you should kind of be investing and what have you. We continue to be, very big believers, kind of the way you invest kind of in AI long term is, the cloud companies we think are going to be the biggest beneficiaries out there, especially when you kind of look at some of those companies from a valuation perspective and the amount of capacity that you're going to need here, over the long term. We also think they're going to be select semi names out there, despite some of the concern out in the market right now, that will continue to benefit in the long term. And I'm not necessarily talking, just, cloud oriented in nature. So, but that said, I mean, they're going to continue to be narratives that change here over time. And I think investors, I think if you're, whether you're an investor or a trader, I think is also going to dictate how you kind of navigate through this market as well.
Do you think today is just the trader reaction, not the investor reaction?
Listen, I think there's a lot of kind of trading involved in this market right now. But, at the same time, there's, one thing the markets hate is uncertainty, right? And when you kind of think about the uncertainty that's been created here from this DeepSeek scenario out there, I think you got to sell off on some names or to, compress some of those multiples out where the uncertainty is greatest. And I think specifically when you look at it, NVIDIA, and it's a name that we've liked here for a long time, I think you have to, potentially put into question, do you need to kind of continue to upgrade at the pace that we've been upgrading at for a name like NVIDIA? I mean, these annual cadences now that NVIDIA is on, is the pace and the amount of spend that we've got on NVIDIA right now kind of warranted in nature? And I think time will tell on that. But that said, I mean, one of our biggest competitive advantages out there, or our biggest competitive advantage, is the fact that we have access to these leading edge GPUs and capabilities. So from that perspective, I do expect these hyperscalers to continue to aggressively invest.
That's what Dan Ives is also talking about this morning in his constant Twitter post following all of this. Given your work on Meta, I'd love to get your thoughts on the fact that the information has this story out saying that there's been a scramble and almost a panic at Meta, with leaders saying that they're not sure if the next Meta flagship AI version could perform as well as DeepSeek. So can they even catch up to what DeepSeek is doing? How much is this earnings call analysts and investors going to demand answers on whether or not they were paying attention to what the competition was doing?
Yeah, I mean, listen, again, I think the competitive landscape has definitely kind of intensified here in the last couple of days, and we do have to take China seriously at this point in time. I think it creates a lot. There are definitely a number of storylines here that are created also, from a privacy perspective and other type of storylines out here as well that I think the U.S. government is going to have to address. But as far as kind of the ability for kind of Meta's models now to be compared to the likes of DeepSeek and others out there, that's just, you're going to continue to see that. So listen, I think that competitive landscape, I think long term is good for the industry, but near term in nature, I think gets a lot of investors out there worried.
Angelo, appreciate your time this morning, sir. Thank you. Angelo Zena there of CFRA. Can see that worry across the board, see it in equity futures, see it in single names, certainly see it in NVIDIA. There's a lot of skepticism out there still this morning, though. Just how many chips were used, what chips were used. There'll be those questions. They won't go anywhere.
And right now, Elon Musk has been weighing in on that. This one AI CEO, Alexander Wang, said that DeepSeek has about 50,000 NVIDIA H100s they can't talk about because of the U.S. export controls that are in place on X. Elon Musk responded, obviously. So that speaks to that skepticism of just how much they cannot disclose about what they used simply because of some of these restrictions the U.S. has put in place.
So basically, the restrictions are there, but they went around them and found these chips anyway. I think a lot of people are questioning whether or not they've used them.
That has got to be the question. Look, this speaks to two things. It's not just the degree of the breakthrough. Lisa, we talked about this earlier. It's also how one-sided the market was going into this news. So you've got to think about that with regard to the price action you're seeing on the screen when you see the Nasdaq down by close to 4%.
This was the main driver of the new record high that we had last week and what we saw last year. It just goes to the skepticism of how much further it can rally and how you can price out what multiples should look like at a time where we are in a transformative period of time with a lot of changes down the pike.
It's definitely one way of shaking up a U.S. equity market if you wanted to. That's for sure.
Oh, that was well put.
Up next on the program, Neil Dutta of Renmark and Oksana Aronoff of JP Morgan Asset Management. From New York, not implying anything.
No,
this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
It's going to be quite an open, 60 minutes away. Equity futures look like this. We're down by 2% on the S&P, down by 3.4 on the NASDAQ. NASDAQ 100 was down by 5. Unreal. Off-session lows then. With some movers going into that opening bell, let's get them. Here's Manus Cranny. Hey, Manus.
Jonathan, good morning to you. We're looking at history in the making. It is the biggest equity wipeout in the history of the equity market. Every 1% that NVIDIA drops is the equivalent of $35 billion. So you're looking at just under $400 billion of a wipeout. The question is the exclusivity, the moat that's built around the high-end chips within NVIDIA. Do you need to torpedo some of the assumptions that you've made in terms of the capex that all of the hyperscalers are making? Citi question DeepSeek's advanced, not using advanced chips. They keep a buy and $175 on that. And that is the big question that is being asked in the market. How can DeepSeek use 97% less power and deliver something at many multiples lower in price? The reverberations are profound. Meta has 4 war rooms on the go to understand what did DeepSeek actually deliver. Of course, they're going to have to stand up their step up in capex that they promised the market, $65 billion from $51 billion. You've got a show and tell moment on the way in 2025. We've been told that before, but that has now been accelerated with this move from DeepSeek. Finish off with the last flurry on Microsoft. We're down just under 4%. Again, it's a huge investment that they've made behind Sam Altman and OpenAI. It's not questioning whether they're going to continue that relationship, but if you think about it, they spent $500 million in terms of this space relative to the theoretical $6 million from DeepSeek. That's the kite that's being flown by many of the American houses in terms of the lack of trustworthiness and veracity of the information that you're being given. And I emphasize the word there, that is the kite that is being flown. We need proof and tell moments. Jonathan.
Manus Cranny, agreed. Thank you, sir. Lots of earnings this week. Meta, Microsoft, 2 of the companies reporting. Those earnings dropping on Wednesday. And that becomes must-watch, doesn't it, later this week?
How do they justify where they're spending? How do they pivot? We were talking to Mandeep saying about how fungible that spending is, how much they transfer it to other areas that could potentially give them more payback. I just want to say the level of trolling out there, A+. Rich Greenfield, he gets A+++.
What did Rich say?
He asked ChatGPT, quote, what does DeepSeek do differently than ChatGPT to reduce costs? And then it forced ChatGPT to explain why DeepSeek was preferable to
Did it give
themselves.
a good answer?
It was cribbed from different news articles, which highlights exactly what it was doing, which is the reason why people are looking at DeepSeek.
Interesting how long it took for this debate to become a market event, right? You could just feel the buzz over the weekend. It just became much, much bigger, even though this is something that came out a week or so ago.
Yeah, there were different Chinese developers that were talking about this about 7 months ago. But again, it goes to the point we were talking about. It's sort of, I don't want to call it a squirrel, because this is actually potentially a game changer.
Well, you did call it a squirrel.
Well, okay, but I'm just saying that there are things that catch the market's attention, and this one is, highlighting the vulnerability in some of the valuations.
If this is a squirrel, are you saying the NASDAQ is like a golden retriever? Is that what you're suggesting? No?
Well, I mean, when in Rome.
All right. Let's turn to the Federal Reserve. Difficult to turn to the Federal Reserve. Hardly anyone's talking about the Federal Reserve. The FOMC widely expected to hold rates steady at its first meeting of the year on Wednesday. Investors bracing for further data on the state of inflation. Neil Dutter of Renmax saying, for our call, it has been one step forward and one step back. Inflation has resumed its cooling trend, while real activity strengthened in December. Neil joins us now for more. Neil, good to see you, sir.
Good to see you, John.
Thanks for dropping by, buddy. Appreciate it. Let's talk about the state of this economy, because you're often constructive on where we are, but coming into 2025, relative to, I would say, the crowd, you had much more questions, I think, on the state of this economy. How strong is the U.S. economy?
Well, I think on the surface, it's quite strong. I mean, we're probably going to get a GDP number this week that shows growth running 2.5% to 3%. But I think when you look under the surface and you peel back the onion a little bit, there's a lot there left to be desired, I think. I mean, the housing market, I think, is quite sluggish. Mortgage rates are still above 7%. There's really not much going on with respect to sales activity. And there's increasing slack in the single-family residential market. If you look at new homes completed for sale, that's up over 50% against last year, so that's going to weigh on construction. You know, the stuff you were talking about around the table on tech, I mean, remember, that has become an increasing part of what's driving growth. I mean, some estimates say that tech CapEx is, you know, the sort of gamut of AI data centers, hardware, software, all of that is adding, you know, 0.5 percentage point to GDP, something akin to what we saw in the late 90s. So if that starts to go, what do you really have left? I mean, so I would say that what we have is a very imbalanced economy. And the labor markets are still cooling. I mean, with all deference to the last jobs number, we know that the quits rate is at cycle lows. What do you think that means for wages, which in turn will put downward pressure on consumption? So I think, you know, for me, I think the consensus is a little bit too optimistic about growth, a little bit too pessimistic around inflation. You know, I think that means that we're probably going to get more than 2 rate cuts this year.
Just to unpack some of that, and we'll get to the conclusion in just a moment, I think the point that you made on tech CapEx is an important one. Is this a macro story? And Lisa, it would go to a question that you asked a little bit earlier about what was happening in the bond market. Bond yields down by 9 basis points. Some people might suggest it is.
That essentially it's propping up and giving a rosy sheen to all of the data that we've seen, and that frankly, that increase in asset prices has fed into this enthusiasm that a lot of people have had that have kept going some of these inflation fears in a more significant way.
Neil, you talked about housing as well. Let's pick up on that point. You've been pretty consistent on this theme. This housing market does not work with interest rates where they are. That's a housing problem or a broader economic problem?
I think it starts off as a housing problem and then becomes a broader economic. I mean, remember, construction employment has been a notable bright spot in the labor market. So if there's slack building and residential construction begins to decline, I mean, we're seeing the builders telling us that they're going to bring their starts in line with sales. Well, if sales are weakening, what do you think that means for starts? It means fewer starts, which in turn will imply less construction employment, and then, you know, I mean, that's a problem. So, you know, look, I mean, I think it can only, I mean, at some level, right, if the Fed can't stimulate activity in the housing market, what are they really doing? I mean, so a lot of what's going on right now, I think, is strong government spending at federal, state, local governments kind of offsetting a lot of the squeeze that we're seeing in the housing market. But if you start to see state and local government spending slow down, which I think is probable this year, you know, that's going to put even more of a light on what's going on with housing.
What makes you convinced that if the Fed does cut by more than 50 basis points this year, there will be no upward pressure on inflation at a time where you see that there's a lot of uncertainty and inflation expectations have been wobbling around and inflecting upward in different readings, depending on political persuasion?
Well, I don't think that inflation expectations are really drifting upward. So, Lisa, I disagree with the premise of what you're saying, but I would just
always love having you.
I would just say, I mean, inflation expectations are I think stable, but I mean, to answer your question, rental inflation will continue to slow down for the foreseeable future. We know that based on a wide variety of data, whether that's you know, the all-tenant rent index that came out from the BLS last week, or just the single-family home price index that or home rent index that came out from CoreLogic. We know that inflation is a lagging indicator, so I would expect that even after the Fed cuts, you'll continue to see this downward pressure on rents. Going forward.
Maybe on rents, right? So this has sort of been the tale of different markets, and the housing market has certainly been marching to a drummer of its own accord. But on a broader market scale, you've seen airline prices surge. You see, depending on the markets, there's
okay,
sort of
but
surge
like when you
pricing
talk
in hotels.
about sure, but when you talk about airline, well, eggs. I mean, the Fed can't do anything about culling of birds. I mean, but. When you talk about airlines, for example, I mean, how are they driving those higher prices? They're cutting capacity, right? So in nominal dollars, is air spending actually going up? I'd argue probably not. That's not the kind of inflation the Fed really should be concerned about. I mean, ultimately, it comes down to compensation growth and whether that equals inflation and productivity over time. And what we know about compensation growth is that it is slowing.
Just quickly, one thing when we were in Davos, a number of different executive management firms said that it seemed like the labor market was a lot tighter than what we'd been expecting, and that actually on the margins for certain areas, you could potentially see an increase in salaries in certain places, in certain industries. You reject that?
Yes.
Neil, let's talk about policy uncertainty. That was a quick one, yes or no?
Can you two start a show? I mean, I would watch. Or just a weekly podcast.
I would just, I mean, if you feel that strongly about the tight labor market, how come it's increasingly likely that firms are holding their workers flat on their pay? I mean, you don't actually cut the wages of the people outright, but you do hold them flat, and that's actually going up. So I would, you know, again, I reject the premise of that. I mean,
so you think employees have the leverage right now?
I think employers have the leverage. If there's so much slack in the labor market, why are you all calling your workers back 5 days a week into the office?
True, because COVID is over and they should have been back already, some would say.
Well, I mean, that's a sign that workers are losing their leverage in the labor market.
Let's talk about policy uncertainty, because you have a different view than most people. Most people have, when they say policy uncertainty, they're concerned about Trump and tariffs and trade, and you actually have certainty when it comes to potentially some of the policy action we might see out of this White House.
I mean, you always have to ask yourself that the people whining about policy uncertainty out there right now, would they be saying the same thing if the shoe were on the other foot? Would they be lamenting the policy uncertainty around tax law?
Kamala Harris won.
Around tax law at the end of the year? That would be a huge uncertainty. So I just think it's kind of interesting seeing what people are picking and choosing. What's pretty obvious to me is that the corporate sector is giving the new administration the benefit of the doubt, okay? If there's more tariff uncertainty, is that the price you have to pay for a more improved regulatory framework on the back end? I mean, if you look at capital spending intentions, at least up until recently, they've been going up, not down. So for all this sort of policy uncertainty and so on and so forth, I mean, I just think there's always going to be uncertainty when the tides change, okay? But it's just interesting to see what uncertainty people are thinking about. So I think it's a bit of a red herring, quite frankly. There are lots of reasons to be concerned about the economy. Policy uncertainty is very low on the list. And I would add, the Fed is a source of uncertainty. No one wants to talk about that. You know, there's always you talk about Democrats and Republicans. On the street, it's, are you siding with the administration or the Fed, right?
Sure.
Those are the political parties that we think about. And I would just say, I think the Fed's a source of uncertainty to some extent. The reason being, we're not going to prejudge, we're not going to speculate in November. 6 weeks later, they do exactly that. And nothing's even happened yet, by the way. And we're going into the year with 2 solid inflation readings. So I think it's interesting that they cut 100 basis points, new guy walks through the door,
And then they start assuming different policies.
yeah.
Now, what was that about? What explains the difference between the Fed's approach under Biden and the Fed's approach once they knew that Donald Trump was elected? Former Vice Chair Rich Crowder sat in your seat a few weeks ago and asked that question. He basically said it was an analytical error that led us to wait when we allowed inflation to get away from us. That was just an analytical mistake. And this isn't about bias, this is about policy. How do you explain things?
Well, I don't think the Fed is just innocently responding to the data. I mean, if you look at the magnitude of the forecast revisions, frankly, they were bigger at the time of the June FOMC meeting when the Fed was backing off. I mean, if you remember, we went into 24, people were betting on the March cut, and then we kind of backed off. I don't think the Fed is just innocently responding to the data, if you know what I'm saying, right? I mean, so I think that they're basically taking out an insurance policy against tariffs. And so, you know, you're kind of getting into a game of chicken with the administration. So if we get to February 1st and President Trump doesn't decide to do tariffs, or, you know, I mean, most of the tariff action so far hasn't really been about reorienting the global trading system. It's really been about trying to extract concessions on things unrelated to economics. So what if you go to February 1st, there's no tariffs put on, then you're back to focusing on the data and inflation, and then what do you have? The Fed may look pretty foolish by March because you may have an abrupt about face.
No, I appreciate your time. As always, thank you, sir. No doubt to that of Renmark. It feels like those two are on a collision course this year.
What, the Fed and Donald Trump?
Or Lisa and Neil.
No, the Fed and Donald Trump. They were on a collision course a long time ago.
Yeah, it's fun. It's always, it sharpens the tools. I think that, you know, look, there is a question of what's noise and what's signal. And I think that, to Neil's point, there is a lot that has been noise, and people will focus on that. The signal, where does it actually come from? The housing market certainly has been a place where basically you've seen the lowest number of sales since 1984 in the past year, or 1994, I believe. There is a larger question, though. There are some policies that will have economic ramifications.
Yeah.
And how do we focus on those rather than the others?
Let's focus on that now. Let's get you some signal. Mike McKee, our Bloomberg economics and policy correspondent. Mike, a big week for the Federal Reserve.
It is a big week for the Fed, but I'm wondering how much impact it will actually have on the markets. Neil and I were talking before he went on with you, and there's so much going on down in Washington that it's hard to know whether the Fed is going to make a huge difference to the markets, since at this point, nobody's expecting them to do anything. It's really going to come down to what Jay Powell has to say. We also have jobless claims, PCE data on Thursday and Friday, and GDP on Thursday, which is going to be important because it's going to show some strength in the economy, and we'll have to look at the underlying areas and see where that strength is and what it portends for the future. Certainly not going to be looking for any strength in residential investment, but we'll also see where the Fed is in terms of its own inflation indicator. And then we'll see. Right now, what you're looking at is a market that has almost come full circle since the last time the Fed met. Just before the Fed met, they were pricing in more than 2 rate cuts, almost all the way to 3. The red lines there, the yellow lines are now where we are. We're back to 2 rate cuts by the end of the year, but just barely. We'll see how that moves next week once we get through this data. And of course, as Neil points out, February 1st.
Mike McKee, appreciate it. February 1st, the big one for trade. Lisa, there's only one analyst note that I'm going to read on Wednesday after the news conference. Just one, from Donald J. Trump. That's the only note I want to read. The only strategist note I want to read, his take on Chairman Powell's news conference.
I can tell you right now, completely out of touch, not understanding. Interest rates needs to be lower interest rates now. I know what I'm talking about.
You won't need to wait till after the press conference. Once we get the decision, there'll be a truth ready to go on demand.
A live blog at the White House. Yeah. I'm all for it. I can't wait for it. A flight to safety in the bond market driving yields lower this morning, following the massive tech sell-off we've seen all morning so far. Oksana Aronoff of JP Morgan Asset Management joins us now, not just to talk about that, but more broadly, how this market's priced. Oksana, it's good to see you.
Good to see you. Thanks for having me.
Thanks for being here. We had this conversation with Neil Dutta just before you about inflation. Neil didn't buy the premise of Lisa's question, doesn't think inflation's going to be a problem. Maybe we continue to see that disinflationary trend. I imagine you take the other side of things from your perspective. Do you think this bond market is well priced for the inflation that you expect?
Definitely not. And I actually want to take a step back because, of course, everyone is an AI expert this morning. And without being one, I do want to point out that it is fascinating how, the narrative that the stock market is getting kind of euphoric has been out there for a long time. And I always say you couldn't know how much farther the stock market can run, right? It kept posting record highs and record highs dozens of times. And then a catalyst comes in, no one anticipated it, and suddenly you're tumbling. And I think it's a very appropriate analogy to the credit market, and we'll talk about interest rates in a second, but I think in the credit market, you always know exactly if you are wildly overpriced. And when we look at credit spreads today in the 200s for junk bonds, for example, is it at a top? Yeah, I mean, could it go a little bit lower than this, tighter than this? Possibly. But if you want actually, a pretty sure indicator of richness, here's a market that is screaming rich.
Well, just to build on that, one theory out there has been that all-in yields are fairly high and they're compensating you for risks that seem to have been minimized because people have pushed out their maturity walls and you are seeing that credit conditions look pretty good. What about conditions makes you think this is a top?
So all-in yields are higher because the risk-free rate is higher. And the risk-free rate, I do agree, going back to your original question, John, that we are probably in for continued pressure at the long end of the curve because, fiscal spending is continuing unabated. That is an enormous amount of spending for this economy. And even in light of the news this morning, are we going to continue to see tremendous spending in the AI space, in the data center space? Absolutely, and that's also a huge driver. We're seeing a majority of companies planning to raise prices. We're seeing ISM service prices moving up. We're seeing the labor market continuing to be resilient, right? There's lots of really constructive things. In fact, you have to really look to find what is not constructive. And I think it's very possible that the Fed is going to have to take some of their cuts back this year because inflation is at best stuck at these levels right now, which means the 10-year is not priced for a higher for longer, structurally higher for longer inflation. It's still very much priced for kind of a 2% world. So all-in yields are higher. because the risk-free rate is somewhat higher, but the actual compensation you're getting for the risk associated with each sector, such as lower-rated credit, is definitely at all-time tights.
We're speaking as the bond market has a huge rally because of the sell-off in big tech, and you just said something that I want to develop. You said there is a good chance the Fed takes back some of its cuts. Are you talking about hiking rates?
Yes.
This year?
It's a possibility. It's not a 0% possibility. And I bring it up because I think everyone has sort of dismissed it as a possibility. Certainly the bar for that is not low. But if we continue to see inflation stuck here or moving up, which is not outside the realm of possibility, I mean, we'll see how this technology story develops. It's certainly very meaningful and cannot be discarded. But the reason for higher rates at the long end has been, yes, growth to some extent, and the growth continues to be, expectations around there continue to be robust in the realm of 3%, but also this fiscal spending. And if you think about this administration, and again, we don't know what they're going to do, but everything they're saying around tariffs, around immigration, right, every policy out there is inflationary at the end of the day, and the Fed can only kind of control the front end. And if they feel like they're losing control of the front end, which is not a zero probability event, you're going to see them have to kind of try to take back the day.
Based off that thinking, then do you think it was a mistake that the Fed cut last year?
Absolutely.
Yeah, so they weren't restrictive.
They, the level of rates when we got to 5.5%, I think it was very clear that nothing in this economy was tremendously restricted. And when we looked at financial conditions, they were actually quite loose. And by lowering rates, they made those financial conditions even looser, and therefore we're seeing inflation expectations creep up, and we're seeing animal spirits return. And some of that is due to the expectations around, again, this administration. But I do absolutely think it was a mistake. There was nothing causing them to do anything. Nothing was breaking. They could have just been sitting there and observing the data.
Two very different views in the last 20 minutes or so. That's what makes a market. Oksana, it's good to see you. Thanks for dropping by.
See you.
Oksana Aronoff there of JP Morgan Asset Management. Equity futures still lower going into the opening bell. Up next on the program, we'll set you up for a big week ahead. Not so much about the Federal Reserve, but lots on tech results. The conversation up next.
Is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but we can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I never. Go.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
"36 minutes away from the opening bell. Let's see if these moves stick. We're down by 2% on the S&P, negative 3.5 on the Nasdaq 100, and Nvidia is down by double digits. This week gets a lot more interesting than it could have been. Coming up a little bit later, we'll hear from the president addressing House Republicans at a conference in Miami tomorrow. Durable goods, Wednesday, a Fed rate decision, and Fed Chair Jay Powell news conference, plus earnings. And these are the big ones: Microsoft, Meta, Tesla, Thursday, Apple, and Intel report. We'll round it out with some PCE data on Friday. But Lisa, it's got to be about big tech this week and nothing else.
Yeah, how much they respond to this DeepSeek development and where exactly they're putting their money, how they expect to really expand their capital expenditures or not in the coming years.
Already we see Meta responding. They have these war rooms. They're concerned that China is advanced. The question I have is, what's this gap now between China advanced tech and AI versus the United States? And is it real? Is it DeepSeek or is it deep fake?
Exactly. Was this achieved with or without some of the leading cutting-edge technology coming out of NVIDIA?
What some people are suggesting is they had that cutting-edge technology. It still increases efficiency, but they wouldn't have been able to do this without the open model that Meta had been using. I expect to hear some questions on that with Meta's
I imagine
earnings.
we'll get tons of questions later this week, particularly for Mark Zuckerberg and the team over at Meta on Wednesday. Coming up tomorrow, lots of questions for Jeff Yu of BMY. We'll catch up with Tom Kennedy of JP Morgan, Sheila Coyote of Jefferies, Lauren Goodwin of New York Life, and many, many more. From New York City this morning, good morning to you all. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
In case you missed it, from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of deregulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
A black swan moment for big tech. 30 minutes until the official start of trading. I'm Katie Greifeld.
And I'm David Gura. Matt Miller and Shelley Bossack are off today. Bloomberg Open Interest starts right now.
Coming up, risk-off sentiment sweeps across markets. Stocks plunging this morning as that buzz around Chinese AI startup DeepSeek shakes up Silicon Valley. And as such, the stakes are high for the Magnificent Seven. DeepSeek's lower-cost AI model casting doubt on those sky-high valuations ahead of a heavy earnings week. But beyond tech, investors are also contending with Trump's latest trade moves and that next Fed decision due out on Wednesday. All of that and more coming up. But let's see just how ugly it is in our markets this morning, because right now you have the NASDAQ 100. We're taking a look at futures here, down about 3.5%. We had been down by more than 4% earlier. You do have NVIDIA down by about double digits right now, so that is weighing in a big way on the benchmark. What I'm excited to get to, though, is why this is showing up in the bond market. You have 10-year Treasury yields currently down by about 9 basis points. Investors clearly is seeking a haven here and finding it in the U.S. Treasury market, all as volatility comes back into the equity market. You take a look at the VIX right now, trading with a 21 handle, David Gura. We haven't seen that in a while.
Haven't seen it in a while, and I'm looking here at individual stocks. Chip-related stocks, NVIDIA and ASML, are leading today's plunge as DeepSeek's lower-cost AI model, which you mentioned, casts down on those sky-high tech valuations. Today's sell-off comes ahead of a spate of big tech earnings this week. Several members of the Magnificent Seven are reporting, including Microsoft, Meta, Apple, and Tesla. You're eagerly awaiting those results, of course, but earnings week is underway in earnest already. SoFi reporting guidance that fell short of expectations. Meanwhile, one bright spot this morning is AT&T. That stock is up on an earnings beat.
Yeah, managing to fight into the green. You also saw Apple briefly turn positive. Of course, we know Apple reports later this week, but all of the attention right now, all of the mind share is on what's going on in the AI supply chain. Of course, DeepSeek really rattling, it feels like, every part of that supply chain, from Meta and sort of the users of AI with their own chatbots, and also the likes of NVIDIA. The question being, are we massively overspending here? So two things, David Gura.
Yes.
One, it's nice to see you.
Great to see you as well, Katie.
Number two is I learned what a Sputnik moment is this morning.
Wikipedia.
Wikipedia, after a text from my father that fear about the perceived tech gap between the Soviet Union and the U.S. in the 1950s. You have to wonder if we're entering into a modern-day Sputnik moment right now.
Yeah, I think that the psychology of this is so interesting and was so manifest over the course of the weekend, into this morning as well. This fear that maybe we weren't paying close enough attention to what China was doing, what was happening halfway around the world.
Did you know what DeepSeek was?
I did read Joe Weisenthal's newsletter last week and had an inkling of it, but kind of saw it as something, you know, that Joe was interested in. Maybe I should pay attention to in a few weeks' time.
All right,
I was caught unawares.
Check out Odd Lots, because apparently they had the scoop. Let's talk about it, though. The DeepSeek drop, rattling tech stocks this morning. Let's get right to Mandeep Singh of Bloomberg Intelligence. Mandeep, I know that you knew what DeepSeek is, but sort of just set the scene for us here. What exactly is this new chatbot that we're talking about, and what does this mean for the current AI supply chain?
I mean, it's very similar to your ChatGPT. Really, ditto. You could go on ChatGPT or you could go on DeepSeek, start asking questions. So really, I think the reason why people are talking about it is really because of the cost. But I go back to when Meta open sourced their Llama model. That, to me, was the pivotal moment where everyone could build a foundational model because Meta had open sourced the weights. And in this case, DeepSeek showed a nuanced approach in terms of bringing down the price when it comes to, per query pricing, which is what everyone has been talking about around scaling laws and how do you scale this. Well, they showed it can be scaled at a much more efficient way. And I think that's why there is so much kind of focus right now. But that inflection moment had to come sometime. It came from their paper because the paper is very detailed.
Get back to the psychology we were talking about here a moment ago. I think the fear is that this thesis or this narrative that so many people had bought into might have some holes in it or some problems with it. How rational is that fear as you think about the way that the market is reacting so far?
Well, so look at the biggest spenders of CapEx. It's your hyperscale guys who are both training as well as using the same compute for inferencing. Now, if the training can be done at a much lower price, well, guess what? They can deploy that same compute for inferencing. And that should show up in Microsoft's inferencing revenue when they report this week, as well as Google and Amazon. So to me, the things are still done on GPU. It's not as if we have found a new architecture and you move away from a GPU to an ASIC or a CPU. It's still GPUs. It's how do you make the most efficient use of those GPUs? And guess what? The hyperscalers will leverage, some of the advancements that are shown in this paper. So to me, that's a positive sign for the cloud revenue that'll be reported by the hyperscalers this week.
Well, it is funny and probably lucky that this does come, this little moment of panic before a big tech earnings week. And that's where I want to go, because one of the fears that's percolating through the markets right now is, has the U.S. just been massively overspending on AI? Can we answer that question right now?
Yeah, I mean, we have never seen, companies like Microsoft spending $80 billion on CapEx in a year.
Meta.
They raised their CapEx last Friday, and Project Stargate coming to the scene, additional buyer of $100 billion in chips. So clearly we are talking big numbers here, and there is a pull forward component in the sense there will be a digestion phase. Now, whether this is the moment where digestion happens in 2026, I don't think these companies are going to change their CapEx plans for this year, but clearly we are at a risk where companies may say, oh, we have enough capacity. But when I look at TSMC, they keep saying we're still short on capacity. So I don't think when you tie, all the data points that we are getting from these companies, TSMC is still supply constrained. So that means we don't have enough GPUs in the world, even if DeepSeek is quite efficient. And that's where I think we still have some runway, but clearly we will have a digestion phase at some point.
All right, Mandeep, so appreciate you. I know you're a very busy, very popular man this morning, so we'll let you go. That, of course, is Mandeep Singh of Bloomberg Intelligence. And let's broaden out this conversation now, because joining us at the desk, we have Jack Manley. He is JP Morgan Investment Management Global Market Strategist. Jack, I won't ask you if you knew what DeepSeek was before this morning, but let's go back to tech earnings. Again, really convenient that we're going to hear from a lot of these companies. How do you think this changes the conversation on this week's earnings calls?
Well, I think it's all about, how do we justify all this money that we've been throwing at this problem that evidently you can solve for a whole lot less? I mean, we don't necessarily have full proof of that statement, but at least for where we are right now, clearly markets are a little bit jittery. So I would say that's the big story, right? I mean, but it's also a great reminder, I think, for investors right now, how vulnerable the stock market is in total because of its reliance on the Magnificent Seven, who are in turn extraordinarily vulnerable, not just because of the valuation environment. I know that's something that we're talking about a lot, but also because of what's going on with interest rates, right? And good time to talk about that, given the Fed. The other kind of complicating factor in here, and I think this is sort of interesting, is that one of the few areas in Congress, and this is maybe opening up Pandora's box here, talking about politics, but one of the few areas in Congress where there actually is bipartisan cooperation is this idea of being tough on China. And that toughness on China has been reflected in export bans of key technology, including some of the technology that we use here in the States to develop AI supremacy. Evidently, that's not working so well, right? If China is still able to develop these chips using or develop this technology using what may be considered inferior chips. So it's not just earnings, right? It's the valuation story, it's rates, it's a reminder that policy is going to be front and center this year. It's all this stuff kind of swirling around while the S&P 500 is notching all-time highs.
What does it tell you about where we are in this story? I think we're all familiar with kind of the genesis of ChatGPT. That took many years to get to a point at which it could be deployed to the public. Here we have this coming together in a year's time. Where are we in kind of the broader narrative about AI and wider adoption, which I assume you would say would lead to kind of a broadening of the market rally that we've seen thus far?
So I would say right now where we are is probably a wait-and-see moment. I think we're probably going to take a breath and acknowledge valuations, acknowledge that the trajectory of interest rates may be a little bit different than we would have otherwise expected a few months ago. Acknowledge, again, that policy is going to be very important, but I'm a glass half full kind of guy, and this to me is actually a very interesting opportunity because the big story for 2025, as we move into 2026, was this idea of a broadening out of earnings, which in turn would lead to a broadening out of participation, right? Where it's not just the Mag 7, it's the S&P 500 as an index. Now, some of that story hinges on this idea that the S&P 493, I like to call them, can actually start to pull their own weight, can actually start to do something. But part of it also hinges on this idea that the luster kind of wears off on the Magnificent Seven, that investors have a reason to start looking somewhere else. And maybe this headline this morning is that catalyst that jumpstarts this broadening out of performance that everybody's so excited about.
Well, where investors are looking right now is the bond market. And this is a circle I'm hoping you can help square. Why are 10-year yields down 9 basis points right now? What is the line that you can draw between what's going on, of course, with DeepSeek into the U.S. Treasury market?
Now I'm guessing right now.
We could put it into DeepSeek.
Yeah, we should type it in and see what it has to say.
Test it out, yeah.
I mean, you know, it's interest in purchasing treasuries, right? And why would you be buying treasuries? Because you're worried about what's going on at a geopolitical level, perhaps. And maybe we're back to having a policy discussion. You know, I didn't know what DeepSeek was. I could have guessed what a Sputnik moment was. And, you know, if we are indeed in this kind of Cold War, at least from a technology perspective with China, and we have a new administration in Washington, there is a lot of attention being paid to policy volatility. So I think that's another thing in here that we have to
Jack, since you brought up Washington twice, by my count, let me ask you what you've learned over the course of this last week with Donald Trump back in office, just about the interplay between policy pronouncements and proposals and the way that investors, markets are reacting to what this second-term president is saying.
What I've learned is that markets are desperate for clarity on what policy is going to look like, and they're leaping to conclusions which translate into outsized volatility in capital markets. I would much rather understand what's going on and then plan for it as opposed to speculate. So I'm almost sitting a lot of this policy conversation out on the sidelines, despite the fact that I brought up Washington twice in the last 5 minutes.
All right, Jack, we got to leave it there. Great to have you with us on a very busy morning. That, of course, is Jack Manley of JP Morgan Investment Management. Meanwhile, quick look on these markets. We still have 20 minutes until the bells ring, but you can see investors getting a start early, selling down big tech stocks. The S&P 500 down about 2% right now. As I said, a lot of that pain is concentrated in the NASDAQ 100, off by about 3.6%. You do have yields lower on the day. That is relative good news for the small caps, and you can see that in the relative performance right now. The Russell 2000 still down, but only by about 1%. Now, coming up, we'll continue that conversation on DeepSeek with C.J. Muse. He is Cantor Fitzgerald, semiconductor analyst. He joins us next. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Now to high interest, to look at what's making headlines around the world. We'll start with the latest on the wildfires in Los Angeles. The region is getting its first rainfall in months. That's posing a new risk of landslides. Right now, a flood watch is in effect for Los Angeles County, and several roads are closed due to mud flows. The Palisades fire is now about 90% contained, while the Eaton fire that destroyed much of Altadena is 98% under control. U.S. Steel is facing a proxy fight. Activist investor Ancora wants to replace the company's current CEO and has nominated 9 candidates for the company's board in a push to abandon the attempted takeover by Nippon Steel. Bloomberg sources reveal that Ancora will push for an end to the litigation attempting to rescue the deal and instead collect a $565 million breakup fee. And Donald Trump caused a whipsaw in markets over the weekend after threatening a tariff on Colombia. The Colombian peso slumped on the news that extensive tariffs would be imposed due to a dispute over deportees. Colombia played ball with Trump and agreed to a deal, narrowly avoiding the economic penalty Trump had threatened. Katie.
Let's get back to those markets right now and the sell-off that is underway. NVIDIA leading the charge right now, down about 12% before the opening bell. Here with more on what DeepSeek means for the U.S. AI industry is Cantor Fitzgerald's semiconductor analyst, CJ Muse. He has a 200 price target on NVIDIA, and I'm so glad you could join us on such short notice because I'm taking a look at the first line of your notes. You write that DeepSeek V3 is actually very bullish for compute and for NVIDIA. Feels like this market needs some silver linings here. So what is that silver lining?
Yeah, good morning. So, I think one of the important takeaways from DeepSeek, given their constraints in terms of GPU availability, though clearly I think what they've announced doesn't include, really the full portfolio of GPUs that they had access to, given how, if they were to publicly announce it, it would go against kind of the embargo. But, they came with some very interesting training techniques, greater optimization that has enabled a very robust model. And I think all the other large language model providers will be adopting these techniques. And really, if you take a step back, their announcement basically tells us we're closer to AGI, artificial general intelligence, not further away. And in that sense, that's very bullish for Jevons paradox, the ubiquity of AI, and therefore, the true demand for compute to support that.
I'm curious, the refrain that we keep hearing is this company was able to basically replicate OpenAI on just a handful of $1 million in a very short period of time. And I would love for you to sort of correct that if it needs to be corrected. Sort of what are we looking at here in comparison to what Meta's devised and what OpenAI has made?
From their comments, they're essentially spent 1/100th of Meta Llama 3.1. It is rumored that they have 50,000 Hopper GPUs. And if that's the case, then they've spent significantly more than that kind of discussed 5 million plus. So I'm not sure I believe those numbers. I think they've spent many more dollars. I also don't think that they've included some of the R&D spend in that figure. But to be clear, the model is very interesting, and I think that it really speaks to, again, taking a step back. We need to improve the cost of compute a millionfold to get to AGI, and this is one more step in that kind of path that we're on. And so I view it as incredibly bullish. If you think about what they've done, how will OpenAI, Meta, others kind of respond? Well, they're going to take these optimization techniques, they're going to apply them to their large clusters. They're not going to slow down spending. They're going to accelerate spending because it's existential and they all want to win. And so I view this, as no change to CapEx announcements. We're going to hear from Meta, Microsoft, Tesla this week. And in fact, I think it will only speed up their desire to invest and try to win, this AI kind of battle that we're in.
Well, you mentioned, of course, the earnings calls we have up, and I hear what you're saying, the bullish case that you're painting for NVIDIA and some of the other names in the supply chain. But even still, I mean, what do you think that these executives, what do these companies need to say this week to reassure investors? Because right now it looks like a sell everything moment, CJ.
Yeah, no, I mean, to be fair, specific to NVIDIA, this is one of the most widely owned names in the market. We're going to get a small beat and raise when they report a month from now. And so obviously there's a lot of nervousness. And I think the truth behind the nervousness is that, CapEx budgets will not change in 25. It's going to be robust. But the worry is that 26 will not be a growth year. And if in fact, we look at DeepSeek and say, what, we're going to focus more on efficiencies and ROI in 26, then you could argue that maybe the level of CapEx spend growth in 26, all else equal, will be less. And that's what's driving the skittishness. And so, taking a pause here and pulling back is very understandable because there is greater uncertainty today. And AI is the most heavily owned part of my world in semiconductors. So I get the skittishness. I would just, advise taking a step back, thinking through what we actually heard. And I would argue a month ago, we were, worried about NVIDIA that scaling laws were slowing, and that's negative for NVIDIA. Now the market's saying scaling is accelerating. Well, that's negative for NVIDIA. You can't have it both ways. So I think as the market truly digests the news, we'll realize this is not a truly negative event. But, I think to the earlier comment, from your prior speaker around uncertainty, DeepSeek adds uncertainty to the market. And obviously, given the heightened valuations, it's a negative today for sure.
CJ, let me ask you lastly just about this kind of geographic binary. And I think when you look at investor skittishness, some of that is attributed to the fact that people were caught blindsided by what advancements a Chinese company had made here. And I wonder how you think about that, our kind of ability to understand or stay abreast of the advances that have been happening in China in this environment where there is clearly such a kind of competitive layer to AI in particular.
Well, I think that China understands how important AI is to their economy, just like the United States. And so, it is going to be a fierce battle. And, it's one that, I think we in the United States can win. But, let's not lose sight of the fact that, China has, very talented engineers. They can put significant dollars behind it. And so, it's not going to be easy. But, I would never bet against the engineers we have in the United States as well.
On short notice and with great insight, CJ Muse of Cantor Fitzgerald. CJ, thank you very much for the time. And coming up here later this hour, we speak to Manish Kabra of Societe Generale, who weighs in on the potential threat from DeepSeek. That's coming up. This is Bloomberg.
Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
All right, welcome back to Open Interest. After a really powerful week last week, you're now looking at a big sell-off, and it's all about DeepSeek and this AI supply chain. The S&P 500 off by about 2.2% right now. A lot of that pain is in the big tech space. The NASDAQ 100 down about 3.6%. And we should show NVIDIA because that is where all the action is this morning. NVIDIA shares currently off by about 12% right now. Of course, this is sort of the black swan moment that people who are worried about valuations have probably been looking for as an excuse to sell.
Absolutely, and I think about kind of the juxtaposition between the news that we got over this weekend into this morning with what we saw unfolding in Washington last week, all of the enthusiasm for more compute and more data centers and more infrastructure spending when it comes to AI in Texas. So a stark contrast, I think.
Yeah, of course, all the fanfare over that big JV they announced with that $100 billion spend coming up. That powered tech stocks last week, but now the question is, are we massively overspending here? What are we actually getting for our investment? But we'll try to answer those questions coming up. Less than 4 minutes until the opening bell. Caterina Simonetti joins us of Morgan Stanley Private Wealth Management. That conversation up next. This is Bloomberg.
In this facility, which is part of your $2 billion investment in the last 2 years, it's a massive amount.
Yes, because, we've focused a lot on automation and upgrading our quality standards so that we can adhere to the US FDA and European standards, because some of our vaccines now are going even to the West, which is a fundamental shift in our strategy, from back in the day when my father started the business, where we were predominantly in India and the developing
India-centric, now you're more global.
Yes.
So you're about 8,000 strong in this
Yes.
facility? All Indian nationals?
Mostly Indian, yes. I would say 99% of talent that we've trained overseas and in India. We have our own internal skill building center where we train on site.
Serum started with just producing vaccine for tetanus, but it's producing a lot more vaccines now. What is the next big thing you think?
A global pandemic flu vaccine is something that we're working on, and I think the world will need that. Not only for the annual flu cases, but God forbid there's a flu pandemic. I think we are very well poised to make 1.5, 2 billion doses and roll it out very quickly to protect the world. And we have, of course, the other vaccines, as we talked about, HPV and malaria, that we've just launched, and we're going to scale that up as well.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
All right, we are moments away from the start of trading on what's pointing to be a pretty brutal start to the week. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld. There was so much euphoria last week. Of course, the best starting week for the S&P 500 for a new president since 1985. For this morning, that feels like a distant memory. We're talking about AI. We're talking specifically about Chinese startup DeepSeek and those lower-cost AI models sending a bunch of panic through the AI supply chain and the broader markets right now. You could absolutely see that in the pre-market. You're going to see that in just a couple seconds. But in any case, you do have those opening companies ringing the bell. There's still some enthusiasm to be found, but not on this board to my left right here. The S&P 500 down by about 2.3% right now. And as we've been saying, the pain concentrated in big tech, that is. The NASDAQ 100 off by about 3.5%. Think chips, of course, but also think a lot of those big tech companies that are going to report this week, such as Meta, such as Microsoft. Your relative safe haven on the day is, of course, those small caps. The Russell 2000 only off by about 1% right now. You do have the bond market coming in, investors seeking safety in longer duration treasuries. That's good news for the Russell 2000, but couldn't even escape the pain today. Meanwhile, let's get back to those chip stocks, though, because NVIDIA ASML plunging as DeepSeek's lower-cost AI model casts doubt on those sky-high valuations. Traders clearly looking for an excuse to sell right now. NVIDIA down about 13%. ASML currently off by about 7.5%. David Gura, it's ugly.
It's ugly. You mentioned those big stocks, Magnificent Seven. I thought we were going to come in here today just talking a bit about earnings in a kind of
surprise,
not bland but regular way. Let's take a look at those Mag 7 stocks. Microsoft, Meta, Apple, and Tesla all set to report results later this week. The stakes are high, as we heard. There's going to be an eagerness to hear sort of them respond to the news that we've seen here over the weekend. We're eagerly awaiting the results of those companies, of course, but earnings week underway already in earnest. SoFi reporting guidance that fell short of expectations. Meanwhile, one bright spot this morning is AT&T. That stock is up on an earnings beat. I want to get back to that top story now. DeepSeek shaking up global tech. Bloomberg Technology co-host Caroline Hyde joins us now for a closer look. And Caroline, I will not ask you the litmus question we've been asking every guest. That is, had you heard of this company before? But I am curious sort of how you see this fitting into this broader narrative about kind of the nascent evolution here of AI.
It puts to question, do you need ever more compute? Do you need ever more $500 billion announcements coming from SoftBank and Oracle and OpenAI for that amount of compute power if you can start to make large language models far more efficiently, far more cost effectively? But there is a big but. This is open source versus closed source. We've been having this argument since the beginning of Meta announcing Llama versus OpenAI, trying to still say it's only really with its own ChatGPTs and its own large language models that the future can be clear. And actually, Bloomberg Intelligence already saying, yes, this is going to make it clear that you can do more with less. And that expression that, of course, openly we're going to see innovation being the side effect of the fact that we've had China being put against, being limited in terms of its ability to be getting these chips from NVIDIA and the like. But Bloomberg Intelligence saying Microsoft, AWS, Oracle, unlikely to be cutting back their capital expenditure because, look, private enterprise need closed models. They need to be able to iterate privately. They're going to still need access to cloud. What's interesting, though, the #1 downloaded app on Apple today is that of DeepSeek. Can you get on it? No. They need more cloud compute. They need more overall access to data centers right now.
DeepSeek, RedNote, all the Chinese apps that are popular right now among U.S. consumers. I want to talk about the lower cost portion of this, though. Do you get the sense that this is going to spur a race to the bottom when it comes to cost? Because that seems to be what's really rattling a lot of the big names that we've been speaking about.
And I think already you've been getting there to a large extent. You've already been seeing that OpenAI have been trying to make clear that this is a cheaper and cheaper offering. Whether or not they're subsidizing it, whether or not they're able to be thinking about more energy efficiency and beginning to get, therefore, more cost-effective and cost-efficient use of their own compute power. But this ultimately does show that you have to innovate to be able to make things more and more accessible. Look, this is free to use, the model. It is open to use, and indeed the APIs, which you can put within your own offerings, your own chatbots, is really, really cheap in comparison to that of OpenAI. So yes, you are going to have this innovation that suddenly means that you're going to be quicker, cheaper, more cost-effective for many. But I think ultimately we're going to be questioning whether or not we should be seeing a $65 billion announcement coming from Meta into data centers. What we loved on Friday, we hate on Monday.
Yes.
But it is also, though, that Llama is an open source offering. Already Meta has been trying to make the argument that when you bring developers together in an open source manner, you're able to innovate that much faster. Bloomberg Intelligence has said for ages that this DeepSeek is a critical large language model provider. It is the 7th best, they thought, in the world, and that was June of last year. They already think China is only about 4 months behind the United States in terms of large language model innovation. That's how they really compared, perhaps, text to image generation. They thought that China was about 4 months behind when it came to competing against Sora, for example. This shouldn't be as big a black swan as it currently is, but it seems as though suddenly we've all woken up overnight and thought, goodness, China's really rather good at this, even if we do limit our NVIDIA chips to it.
Well, my takeaway here is that we all need to be reading more Bloomberg Intelligence, apparently collectively on Wall Street as well. Caroline, I know you have a huge Bloomberg Technology show prep for today. That, of course, is Caroline Hyde. She is co-host of Bloomberg Technology. And coming up on that program, former White House Chief Information Officer Teresa Payton will join the program. But stay with us now. Let's bring this back to the markets, because joining us is Caterina Simonetti. She is Morgan Stanley Private Wealth Management Advisor and Senior Portfolio Manager. Great to have you with us on a very big day in markets, heading into really the heart of earnings season, Caterina. If you think about the last couple quarters, there's been a real scrutiny on how much big tech is spending on AI, on CapEx, how much they're devoting to these technologies. I have to imagine that question just became more urgent.
Absolutely, Katie. Thank you for having me on the show today, out of all days, because decline in tech stocks today can be really attributed to two main factors. One is high valuations, and two is high portfolio concentrations. As investors are so driven by this fear of missing out and missing the wave and missing this technological revolution that is definitely upon us, we keep emphasizing that this change takes time. Technology is not perfect. It's not going to inevitably, immediately lead to the efficiency, productivity, and lower costs. These things are going to take time, to develop. And therefore, we need to be patient. And if there has ever been an argument for maximum portfolio diversification, this argument is now. Technology is extremely important within the portfolio. It's going to be important going forward, and all these things are going to, eventually play out. But costs are major, and not just the costs of operation and cost of energy and data centers and, operating AI, but also we are in the high interest rate environment, and, the Fed action is going to play a big role here.
Caterina, we've heard so much about the need for this market to broaden, this hunger for more breadth, and I guess this could be kind of an unexpected, perhaps unwanted catalyst for that to happen. But I wonder if we could kind of look at the catalyst such that it is. I'm curious what it tells you just about the state of the promise of AI. We have banked and put so much faith in this being the future of technology more broadly. Is this cold water to some degree? How do you look at sort of what we've learned here in recent hours?
Well, it's important to remember that we're in this for the long run. And the fact that AI is going to be a catalyst and a game changer, both in financial services, in healthcare, in manufacturing, like really every aspect of our lives, is undoubtable. We absolutely have to be present. We have to be invested in tech and AI. But should we be concentrated in these areas to the extent that majority of the portfolios are following the returns of 23, following the returns of 24? Absolutely not. Rebalancing plays a role, and we also can't forget that the market leadership is ever changing. If we look back at performance of last year, the best performing sector was actually financials, not technology, and investors are starting to realize that being in sectors such as energy, utilities, materials, financials is extremely important for the total performance of their portfolios, and this tech concentration needs to be rebalanced and reduced, and that's what we're seeing in the trading pattern right now, days like today.
Well, Sonali Basak is smiling somewhere in Miami with that financials mention, because that has kind of been the underappreciated leader of this market. I want to talk about healthcare, though, because you think about healthcare, it's one of those places where there has been a lot of talk about potential AI potential when it comes to healthcare, but it feels like there's just been no love for that sector, even with maybe some M&A rumors as well. How are you thinking about one of the most beaten down sectors there?
Well, Katie, with so many drugs are having trouble, quite late in clinical trials, healthcare is definitely, taking this moment to figure out, the direction. But AI component there is unbelievably important. When we think of the difference AI is going to make in generating the pool of patients for clinical trials, inefficiency of bringing the drugs to the market, inefficiency of analyzing the data. This is going to be the game changer for healthcare. So we absolutely are bullish on the sector in the long run, and we see a lot of buying opportunities. Investors always are looking for value, for productivity, for earnings. They're saying, where is the good sector where we can find some interesting buys? And healthcare is definitely the sector at the moment.
On today of all days, but any day, really, we are grateful to Katerina Simonetti of Morgan Stanley Private Wealth Management for joining us as we continue to follow this market sell-off. It continues, rattled by China's DeepSeek AI. We're going to speak with Manish Kabra, SocGen's lead U.S. equities and multi-asset strategist, to get his perspective on the market effects of this. Coming up next, this is Bloomberg.
So a number of people, I think, from Homeland Security and or the CIA or NSA have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements, and TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Welcome back to Open Interest. A quick check on stocks right now. We're going to start on the left side of your screen with NVIDIA, currently down by about 11% after that DeepSeek progress news. That is really weighing on your big benchmarks right now. The NASDAQ 100 off by about 2.8%. We had been down 4% in the pre-market, so those losses lessening right now. The same story is true in the S&P 500, currently off about 1.7%. That's pretty steep, but of course, a lot can change between now and 4 p.m. We'll continue to track the progress there, but it's time now for top calls. Some of the analyst action in focus this morning, and first up, Ralph Lauren, no longer a buy over at Raymond James. The firm is cutting its rating on the high-end apparel retailer to a hold. Bloomberg Intelligence estimates that Trump's proposed 10% tariff on China could raise apparel prices by up to 2%. Next up, Barrick Gold getting a downgrade over at Bank of America. The firm is cutting its rating on the mining company to neutral, citing caution in its fourth quarter results. It reports earnings in 2 weeks. And we end with State Street, no longer a sell over at Wolfe Research. The firm is raising its rating to neutral after the bank reported earnings and sales that topped estimates earlier this month, David.
We're getting back to the news of the morning. DeepSeek putting tech stocks on track for a $1.2 trillion loss today. We're joined by Manish Kabra, Societe Generale, lead U.S. equities and multi-asset strategist. Manish, thank you very much for being here. And I'm curious at this point, given what we have read, what we know, what more you need to know or learn about what this company has done and kind of the integrity and strength of this AI model? Where are we just kind of in identifying and understanding its capabilities right now?
Yeah, no, I think it's well, thanks for having me again. It's very clear, as in the two parts of the U.S. market. One, there's American exceptionalism, ingrained into NASDAQ, into tech sector. And then there's America First, which is all about, the reflationary policies, the new admin is proposing. So let's, let's split this part. And I think that's, that's the most crucial element at this point. Now, I would say NASDAQ, which has been the exceptional index, exceptional profit run, 20% annualized growth for 20 years. I think it's very obvious, market gets concerned with anything that hampers or even puts a smallest of the smallest question mark that there can be some form of profit hit. And, the current uncertainty I would flag, with, the DeepSeek is, I would say it's still a lot of unknowns, rather than known here. But one thing is very clear, market is concerned, where the profitability of these companies are going.
Well, let's wrap in the valuation conversation to what we're talking about, because valuations, it feels like we talk about high valuations all the time, but they don't matter until they do. And clearly today they matter. And against that backdrop, would you expect this to become a buy the dip sort of moment, or do you think that those valuation concerns will persist?
As in valuations, two elements. One, the U.S. bond market, 10-year bond yields, which I would say is one of the good things that has happened, or let's say blessing in disguise that has happened is, there's a bid on U.S. 10-year. And I think that gives a confirmation, at least we should not see valuation-related derating in this backdrop. The second part, which is all about the profits. And as in says, something we have noted, this year, if we think it, this year was not about NASDAQ 100 profits anyway. So, the dollar has been a headwind, the growth rate has been slowing. And I think that profit growth rate driver, whenever the pace of profit growth slows down, I think that's where some of the valuation headwinds tend to happen. Now, I would say we don't have a tech hard landing view, but one of the reasons why we have said, and arguably for last 7 months, is not to look for those parts of the market where rate of profits have been slowing. So, and then I would say valuation would matter, but they matter only in two scenarios. One, which currently is a good news that bonds have a bid. Second, on the profits, but I would say outside tech, we are going to see double-digit profit growth in 2025. So you have a lot of places to buy in the index.
I know that we're 18 minutes into the U.S. equity trading session, but I want to meditate on the bond market a little bit because we were talking about it, this bid that you're seeing in bonds as a result of this fear in the market right now about the U.S. lead in AI. Why does that translate into a 6 basis point bid into the 2-year Treasury yield? Why would this matter for the Fed?
But I would say at the moment it's a knee-jerk reaction that market has gone for safety and as in different parts of the bond market has got a bid. Now why it matters and what has been the unknown is what is the true cost of AI product rollouts, which is the question mark that DeepSeek has created. So I would say the uncertainty, if we think the extent of spending that hyperscalers have been doing, if that should be reduced, if capex gets into focus, we should not see as much as inflationary dynamics that the techs, the Max 7 capex cycle has created. So I think that's that's one of the key drivers, which is would AI be cheaper than what market has been expecting? If that's the case, I think the cost of productivity actually goes lower.
Manish, let me ask you just what this means for our kind of broader understanding of where we are in the development of AI. And a word that I keep seeing in writing about this is transparency. And I can use a different application of that just to sort of ask you about how much transparency we have into how these companies are iterating and growing and getting the kind of compute they need. Is this going to be a catalyst in kind of another way where we're going to have to, there'll be a demand on these companies to sort of tell investors more about what they're doing and intend to do and how they intend to get there?
Yeah, as in first and foremost, the onus is on hyperscalers. The onus is on them to prove, one, they have the pricing power, and second, with DeepSeek, what's come into another equation is the capex projections. So if you have product pricing with the question on the capex projections, I would say the onus is on the hyperscalers to prove, at least in the upcoming earnings season.
Very curious what you're telling jittery clients of yours, should you have them, just about how they should be riding this wave. 1.2 trillion is a large number. What do you say to folks who are nervous at this point in time?
I'd say a lot of folks are nervous. So, as in my key call is we all knew, and literally everyone, in the market, they're aware of the concentration risk. What not has been appreciated is, when rate of profits change, when the policy shifts in certain direction, positioning needs to be changed. And I think that positioning is all going towards S&P 500 on an equal weighted basis, which I would say just 2 weeks ago had a big hit, like 7 to 8% hit because of the bond market. And the bond has been that rotation from NASDAQ to S&P 500 equal weighted, instead of just 1 or 2 trading days, I think it becomes for longer period. And I think that that's our biggest call, which is American exceptionalism positioning, which everyone has. You move into America first positioning, and that American exceptionalism to America first literally translates into moving from NASDAQ into S&P 500 equal weighted.
And Manish, we have less than a minute left with you, but it's a fun detail that, of course, we're having this moment of panic, if you want to call it that, before big tech earnings. Did what we're talking about right now, this moment in time, change what you're going to be looking for when we get those reports and those earnings calls this week?
As in one, every company would get asked on tariffs. Every company would get asked on, the dollar movements. If you combine those things together, that would be a big focus. To what degree companies say they can, navigate or pass through the cost of the elements that can happen. But ultimately, we want confirmation that the GDP growth that we have seen, the U.S. consumer spending that we have seen, all of that needs to come into numbers. So I think the U.S. growth as a driver or economy as a driver needs to come into the profit side now.
All right, Manish, really appreciate you joining us on such short notice on a black swan moment of sorts. That is Manish Kabra of SocGen. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
All right, welcome back to Open Interest. We're taking a look at the stock market right now. Not quite at session lows. Some of those losses coming back. The S&P 500 currently down about 1.6%. That certainly isn't good, but it's not as bad as it was maybe 30 minutes ago. You take a look at the NASDAQ 100, still lower mightily on the day. The NASDAQ 100 off by about 2.7%. A lot of that pain showing up in big tech, as you can see in NVIDIA shares, currently off by about 11%. Just billions and billions of dollars being shed in market cap right now. But let's take a look at the VIX. I thought this was interesting. Of course, at the top of the show, we saw the VIX trading with a 21 handle, but now that quiescent VIX, David Gura, coming in below 19.
Love that word, love that adjective. Yeah, I mean, I think it's fascinating to watch this in the context of the larger AI story. I, an English major, kind of thinking about that in that kind of thematic way.
You've got a lot of words.
You know, a lot of words and thinking of it in that kind of novelistic way. But I do think that the notion that we've been kind of seeing huge amounts of spending here on data centers, on compute, we're seeing it questioned today.
Yeah.
To what end, I don't know.
And we know it's going to be questioned on the round of earnings calls that we have coming up from a lot of those big tech names. We'll discuss all of that in the hour coming up with Ann Milletti. She is Allspring Investments Global Head of Equity. This is Bloomberg.
offers before to take over Greyhound, but then in the midst of the pandemic 2.5 years ago, we had this fantastic opportunity to buy the brand and the network. When we took on Greyhound onto the Flix tech platform for network management, revenue management, we saw the highest unit economics in more than 100 years of Greyhound history.
My vision is to transform long-distance bus travel in the United States and make it one of the top considerations for anyone planning a long-haul journey.
CEO Kai Boyson imagines even more potential if state and local governments recognize the need to support long-distance bus travel with integrated infrastructure.
We need to think about the infrastructure in the United States holistically and think about the transportation system as one integrated system. And intercity bus needs to be an integral part of that system. One should be able to connect from one mode of transport to another seamlessly, easily. We have great success models in the United States. For example, Los Angeles Union Station, Boston South Station, or New York Port Authority Bus Terminal, or Washington, D.C. Union Stations.
Kai and the team, they are doing a fantastic job. They have really improved the product, they have improved technology, they have really made the production more efficient, that at the moment it's also a profitably growing business.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Reporter Linda Gradstein has details from Jerusalem.
Tens of thousands of Palestinians massed near the checkpoint waiting to go back to their homes in northern Gaza. Israel says it will not allow members of Hamas to return, but Israeli analysts say most are not being checked, and it is likely there are members of Hamas in the crowd.
Today marks the first full work week for Pete Hegseth as the nation's new defense secretary. Correspondent Cammie McCormick.
Hegseth told reporters that there will be more executive orders coming today. They will include, he said, removing DEI programs at the Pentagon, reinstating troops pushed out because of COVID mandates, and an Iron Dome for America. And he spoke of the orders to send troops to the border and assisting with deportations, saying that is something the Defense Department will absolutely continue to do.
Environmental advocates are blasting the Trump administration for withdrawing from a Biden-era proposal to limit forever chemicals from drinking water. Adrian Esposito is with the Citizens Campaign.
This rule would have caused industry to participate in reducing PFAS, and instead, it sends a signal to industry: you can poison us as much as you want.
PFAS have been linked to cancer, immune suppression, and developmental issues. Heavy rain has triggered flooding and mud flows in Southern California, where crews have just gotten a handle on this month's devastating wildfires. CBS meteorologist Nikki Nolan.
We are tracking a low-pressure system that is delivering rain to the southwest region of the U.S., including the burn scar areas in Southern California. A flood watch remains in effect for the Hughes Fire burn area.
Public schools in Malibu are closed today because of dangerous road conditions. Unusual winter weather that swept the South last week has led to a shortage of rock salt. Ted Pyle owns several hardware stores in southern West Virginia.
The amount of salt sold has been pretty minimal compared to what has happened this year. I mean, we've got a lot more snow. It's been a lot colder. And we've got repeated snows. That's created the shortage in supply.
China's DeepSeek AI is sending stocks reeling. The app's soaring popularity with its ability to match cutting-edge chatbots using a fraction of specialized computer chips. U.S. chip maker NVIDIA down more than 12% at the start of the trading day. Right now, the tech-heavy NAS is off 539. This is CBS News.
Terms at JacksonHewitt.com.
Paul McCartney's raising a red flag about artificial intelligence.
Protect the young people.
Sir Paul telling the BBC he's worried about changes the UK is considering to let tech firms use copyrighted material to help train AI models unless creators opt out. He says young artists write a beautiful song and anyone who wants can just rip it off.
You know, if you're putting through a bill, make sure you protect the creative thinkers, the creative artists, or you're not going to have them.
Don't let that be, is his message.
So that these people have got jobs and can enhance the world with their wonderful art.
Michael Toscano, CBS News.
Timothy Chalamet's taking heat for a Saturday Night Live skit poking fun at a late president. The actor played a fitness instructor.
Jumping guys, just your arms, just your arms. Jimmy Carter, Jimmy Carter.
Mr. Carter died in December. Deborah Rodriguez.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so you head over to youtube.com, search Bloomberg Podcast Live. That's the quickest way to find us. Alex Steele, Paul Sweeney here. We are looking at a sell-off here. The S&P is off 1.7%. The NASDAQ's off 2.8%. All right, who had DeepSeek on their bingo card?
Didn't have it.
Did not have it. But now I'm kind of reading in on it. I'm kind of reading in on like everybody else. Mandeep Singh, he's going to join us. He's our technology analyst for Bloomberg Intelligence. He's been joining us all morning, kind of getting us up to speed on what's happening there, what it means for the AI world. Kim Forrest, founder and CIO of Bouquet Capital Partners, is also going to join us and talk to us about markets and what she's doing with this sell-off here. So look at that coming up. Gina Martin Adams, Bloomberg Intelligence Chief Equity Strategist. She's going to be in our studio. She's going to give us context for days like today. But right now, let's go to Mr. John Tucker and kick everything off with the Bloomberg Business Flash.
And this Bloomberg Business Flash, guys, being brought to you by IBKR. Will the U.S. CPI exceed 2.8% in January? Trade your prediction with IBKR Forecast Trader. The yes was recently at 35%. By yes or no, earn $1 if you're right. Go to ibkr.com/forecast. Well, the news right now is, yeah, we're lower, but off the worst levels of the session. The NASDAQ 100 right now down 2.8%. That's a decline of 613 points. The NASDAQ Composite Index, that's down 2.9%. S&P 500, Paul, as you mentioned, down 1.7%. That's a 106% point decline. Right now, the index at 59.96, and the Dow Jones Industrial Average down just 0.3%. Of course, the DeepSeek jitters pummeling the biggest U.S. Tech stocks. Right now, as you look at shares of NVIDIA, they are down 12.2%. Broadcom shares, they're down 12.3%. Earlier today, we talked to Callie Cox at Ritholtz Wealth Management. She says, you know what? She's not surprised by the tech-led sell-off.
I think what I'm taking away from the news this morning is that, you know, tech is a vulnerable sector right now. And I could have told you that last week, last month, 6 months ago, mainly because it's been, it's been one of the most, watched sectors and one of the most momentum-led sectors over the past year or two.
Well, the DeepSeek news comes just as investors brace for a slew of earnings from the Magnificent Seven. Wednesday, Microsoft, Meta, Tesla, they're scheduled to report. Apple follows Thursday, while Alphabet and Amazon announce next week. NVIDIA's, that's going to be at the end of next month. Profits for the seven giants projected to increase by 22% in the fourth quarter. That actually would be the smallest jump since the first quarter of 2023. All right, here's one from Bloomberg Intelligence, reading this morning. Independent U.S. AI benchmarking service LiveBench ranked Chinese startup DeepSeek's Coder V2 model as the 7th best large language model globally. They did this back in June of 2024. Really? So it's not like this is a brand. This company's been
just
there.
For me, maybe.
Well, just for the app, you could get that in the U.S. last Monday. But in terms of anyone watching it, it was, 6, 7, 8 months ago. And now it just feels like the Western press is getting wind of it.
And we had Joe Weisenthal in studio just a few moments ago. He's actually he spent the weekend kind of just using it. He says the ease to switch from one AI service like ChatGPT to this one is frictionless. So it's
interesting.
Yeah, really interesting.
So the barrier to entry is high, but once you're in it,
actually,
to
the barrier
switch
to entry,
is easy.
The BI is saying the barrier to entry is low. All you need is some technology.
Okay, so I don't have to spend all that CapEx money now?
Right. So if you're Apple stock is up today because they're like, at some point we'll put this stuff on our phones, and you're telling me it's going to be cheaper now to put on my
Well, they're not going to pay any of that.
Yes, exactly.
Also, NIO, for example, that's also up too. It's a Chinese EV company. The ADRs are up by 1.5%.
Okay.
I was kind of looking through the supply chain function on the Bloomberg terminal of NVIDIA and like who they sell to. The whole point of Apple, like those that get the chips now, are they going to pay less? Therefore, it's good for them. Anyway, lots to discuss.
Yep.
That's your Bloomberg Business Flash.
Thank you, John
The
Tucker.
extended version.
Alex Steele, Paul Sweeney here. So there's lots of stuff to discuss on that end. There's a lot to discuss on flows. We are off the lows of the session. Clearly we're going to have to see some fund selling because we saw that volatility spike quite high to 18. But I don't know. Funds don't come in until after the open, the cash open. So we'll have to see how this actually settles out.
Our friend Eric Balchunas from Bloomberg Intelligence, the ETF analyst, says, watch Vanguard. They're going to see inflows today because that's those long-term retail investors, they buy on dips.
They buy on dips. That's quite interesting.
The traders sell and...
But the levered ETFs, that will be pretty.
Yes.
That have some of these names in it.
The Granite shares, 2x long NVIDIA, down 25%.
Oh, yeah. That's not going to be pretty. All right, let's get some more insight into the market drivers with Isabel Lee. She's Bloomberg Cross Asset Reporter. Isabel, what are you watching?
I think you can't not look at it. NVIDIA. It plunged 13%. It's still down just by 12.5%, so it did not pair gains at all. And this is the biggest drop in its history, erasing $465 billion in market value. So this eclipsed their previous record in September, which was a 9% drop. That erased around $280 billion in value. And if NVIDIA drops, the market also drops because it just really highlights the weight of NVIDIA. And in the previous drops of NVIDIA, it caused 7 of the 10 biggest one-day drop in the S&P. So it's really just an astonishing thing. And of course, chip-related stocks are declining. Broadcom, Lam, Marvel. Power stocks, if you really want to go there too, because it's fears of weaker electricity demand from AI data centers. So right across the screen for you.
Yeah, the stocks index is down by about 6%. I'm interested in like the U.S. exceptionalism trade. If that was based on AI and if that's out of favor, does that U.S. exceptionalism theme broadly kind of move about? Isabel, what else you got?
So that's what they're seeing. Sorry, to that point, like, is this going to be the black swan of the AI? But then some analysts, like Stacy Rasgon, a Bernstein semiconductor analyst, said, not really. I mean, NASDAQ futures are now, at least this was earlier this morning, was off 2%. And Alex, you made a point that we might just close flat. So who knows?
Okay.
Maybe.
First of all, not investment advice. I'm
not
just
investment
saying.
advice.
But the fact that once we have the cash open, we're well off the lows. I just wouldn't be surprised if we recoup some of these losses. But don't quote me on this. All right, Isabel, thanks a lot. Isabel Lee, Bloomberg cross-asset reporter. All right, let's get more in depth here on what we're seeing in AI and DeepSeek. Mandeep Singh is Bloomberg Intelligence senior tech industry analyst. We were talking earlier about how people knew about this for months, right? This is not like all of a sudden it popped up yesterday. In the U.S., you could get it last Monday. Why now? Like, why is it rocking the market right now?
Because they released a paper over the weekend that describes how they got to that price point in terms of pricing per token and what was their approach. I mean, this is open source in terms of what they did, how they got to that level of efficiency, and I think that's what everyone feels gives a lot of runway for others to improvise now in terms of, you know, making those hardware efficiency improvements and stuff like that.
Is it a better mousetrap at a lower cost for vis-a-vis ChatGPT?
Think of, you know, traditional open source as operating at the infrastructure layer where you have a Linux operating system, for example. You know, the operating system is there. Any developer could come in and build their application. So this gives the power back to the software guys. I mean, for the last 12 months, it was all about the chip guys, the foundational companies. Guess what? Now the power is shifting back again to your software applications that actually deploy the AI. You don't have to pay as much for the infrastructure layer anymore.
So what kind of companies are those?
I mean, all your application, whether it's your Salesforce, your Workday, your SAP, your Oracle, I mean, pretty much anybody who has a software application benefits from this because the cost of deploying AI, cost of building AI is going down.
So to that point, sorry, jump in. Wouldn't that be good then for like a Meta and a Microsoft and stuff?
Well, it's good from the application side, but from the CapEx side, because they are investing $80 billion in CapEx from Microsoft, and Meta actually raised their CapEx on Friday to $65 billion. So the investors who are listening to that are like, why do you have to spend $65 billion as opposed to, you know, DeepSeek doing it a lot more efficiently, both on the training side and the inferencing side. So I think that's where the
answer to that from Meta would be, what do you think?
Well, so they will just deploy it at scale to across their family of apps. They make AI available for everybody without having to charge for it. Right now, OpenAI has a subscription, a $200 subscription for your O1 Pro model because it's expensive. Well, if it's cheap, then they can give it out for free and maybe monetize it with ads. So the reason why all these companies are using subscriptions for LLM chatbots is because it's expensive to monetize using ads. So now we could go back to the ad model and say, maybe you can just monetize the eyeballs through ads, which is not as effective as paying a $200 subscription, but still, you get that engagement.
How long would it take for them to shift over to a different model?
Well, it sounds like it's as simple as making an API call. So instead of calling OpenAI API, you can call a DeepSeek API now, and it'll give you a similar response. So, you know, LLM chatbots are measured in terms of, you know, the quality of their responses. Well, guess what? A DeepSeek is giving you a comparable response to OpenAI at a fraction of the cost, then you can flip that API and say, I'm going to go with DeepSeek now.
NVIDIA down 12%, Broadcom down 12%. Why? Chipmakers taking it.
Yeah, I mean, everyone is expecting CapEx to come down now as a result of that. It may not be 2025 CapEx, but 2026 and beyond. And look, all these hyperscalers kept telling us, you know, this is a long-term runway in terms of, you know, the CapEx spend, the build-out, and we're not going to slow down. Guess what? The slowdown could happen now.
Was it a coincidence that Meta took their CapEx from $50 billion to $65 billion on Friday, and today we get this announcement?
I don't think so. I think they were aware of this all along in terms of where DeepSeek was. It's just, this is the moment for open source. And Meta Llama is the open source model. They were the first ones to open.
Llama?
Yes, that's their model that they open sourced way back. So I think this is the moment for open source, and Meta wants to participate in it, which is why they are building additional capacity, and they feel they can gain share.
So they have to put a lot of money into an open source Meta Llama to compete with the open source DeepSeek.
Yeah.
Even though DeepSeek didn't have to put in a lot of money to make that.
Well, so
Does it
DeepSeek.
hurt anyone else's head?
Meta has
I like that. I'm going with that.
But Meta has a distribution. Remember, Meta across its family of apps has 3 billion users, monthly users. DeepSeek doesn't. So Meta has the scale on their family of apps which they need to deploy AI on. And also they want to create an ecosystem. I think one of the reasons why Meta's open source their Llama model is because they want a developer ecosystem, where developers develop the apps first on their platform versus an Apple or an Android. And I think that could be the reason why they want to double down.
All right, Mandeep Singh, thank you so much. We appreciate it. We're going to be leaning on you and Anurag Rana and all your tech analysts at Bloomberg Intelligence. Robert Lee, L-E-A, he's a Bloomberg analyst based in Hong Kong. He's got the definitive report out there on this whole DeepSeek thing. He's been writing about it for a while. I just didn't pay attention, and I think I represent a lot of other people. I think I represent the market, the S&P. The NASDAQ, I'm sorry, down 3%. It was down 5% in pre-market trading, so a little bit off the bottom. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. In the S&P 500, 7 and 11 major industry groups are lower right now, and it is being led by information technology. DeepSeek's latest AI model seems to present a visible challenge to the costlier models like OpenAI. Also raises the question over the hundreds of billions of dollars that are going to be, well, planned to be spent on AI. Right now, NVIDIA also taking it on the chin, 13% lower, 13.5% lower right now. You have shares of Broadcom. They are down close to 14%. Overall, the NASDAQ 100, 651 points lower. That is down just about 3%. That's actually off the worst levels of the session. The Dow Jones Industrial Average, that is down just 0.25% right now. The S&P 500 down 1.8%. That is a decline of 109 points. AT&T reported results, fourth quarter results exceeding expectations. Growth on the top and also on the bottom line, boosted in part by an increase in new customers. UBS starting a wave of job cuts in its home market. Hundreds of employees receiving notices in Switzerland. They're pushing on with a headcount reduction as they integrate with Credit Suisse. Also seeing a flight to safety with the Treasury market, the 2-year yield. Right now, that is lower as traders bid up the price of Treasuries, down 5 basis points, 421. The 10-year, 7 basis points lower, and that is at 454. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, thanks so much, John Tucker. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We cover all the news, business, economics, finance, politics through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. All right, let's get more on this tech sell-off here. Kim Forrest, founder and CIO of Boca Capital Partners. She's also a former chips person. Like, she did the stuff, so she knows the things. Clearly, the DeepSeek news is upending most of the tech industry, right? You get the SOX indexes down hard. You get all the hyperscalers are down hard. All of the chip makers, all the power makers are all down hard. Is this the reckoning, or is this a buy the dip moment?
Well, that is the question, isn't it? I would say it's a little bit of both. I think this is a good level set, re-leveling, resetting our expectations. So the first thing is we have to really see if this is true. Now, apparently the company is open, DeepSeek is an open source company. They have released how they've done this. But, you know, replication is key, so we're going to have to see if this actually works. That's thing number one. Like, don't get too upset about major developments until you know that they're real major developments, right? So that's thing one. Thing two is, and I think this has been troubling me for a very long time, especially with like last week's Stargate announcement. It seems as if people have been expecting AI, which we don't know what the payoff is yet. We have a pretty good idea. It might help us out. But we're going to cover the Earth, essentially, in data centers and use far more power than we create right now. So those two things are kind of troubling, that people have been making investments in companies going to produce far more than they can produce now. And do you see what I'm saying here? We had these really big expectations, and I didn't think that they were going to come to happen in short or long term because of the, well, physical limitations of it.
So, Kim, at this very early stage, I think I'm probably representative of most of our listeners and viewers, had not heard of DeepSeek before this morning.
Sure.
And so that's calling into question kind of what we think we understood about AI and its implications, not just for technology, but for the stock market in general. My only question that I think I have now that has any relevance is, do I have to rethink my spending associated with AI?
It depends on how long your time frame is. If it's the very short term, probably not. You'll get rewarded because, well, orders are in and all that kind of good stuff. And by short term, I'm talking a year. But let's say 3 to 5 years, maybe. And why is that? Well, if we can really train models more rapidly with less input, which is a good thing, right? Where were we going to get all this electricity? That was like my biggest question. But anyhow, back to your question. I think, this is part of being an investor, is understanding how long was I planning on keeping this. Mm-hmm. So that's part of the problem. We have two more problems that are not being clarified by DeepSeek. One is, and remember, I used to do this, so I'm way down the road from most investors in thinking about things, but as I use it, I'm not getting the results that I need, and by that I mean it's not right enough. The error rate that I get back from the questions that I'm asking are anywhere between 5 and maybe 30%, which that's huge. Like, I can't just use AI, I have to babysit AI. So these are problems that aren't solved by anybody at this point. And then there is, how are we actually going to use it? I think there was, a Bloomberg report that was saying that probably 200,000 people could be laid off. Those lower level entry level people into finance, and then that mid-tier that are now, kind of like the AI for investment banking and equity research. But if we were that wrong, we wouldn't last, right? Like, if you're 5% wrong in investment banking, your career's really short. So, these are problems that aren't being solved. Mm-hmm. So that's another issue for investors. How long is it going to be till these get right enough to replace a person?
That's such a great point, because I was also reading an article that talked about the limitations so far that have been seen about what is it? DeepSeek. I want to say GeekSeek. I don't know what that was about. DeepSeek was its lack of inability to discuss Xi Jinping or to give real answers on Tiananmen Square. Just those topics that are near and dear to China's heart. And that's in part some of the issue that you're talking about. So who wins in this right now?
Who wins? Well, I think investors are losing in the short term. But if you, like me, think that AI is a path to productivity, and productivity always wins, I think you could be a winner. I think maybe companies like OpenAI and Microsoft, by dint of investing in them, and then everybody else who's developing AI, they might be winners. Maybe the Stargate. I don't know why I can never remember. That's my hiccup here. I can never remember that.
Fun names.
Because it has nothing to do with stars or gates.
Yep.
But Stargate might be the loser in those people, because we're not necessarily going to need to cover the Earth in data centers, right?
Yeah. All right, Kim, thanks so much for joining us. Always appreciate getting your perspective, your technology background. Kim Forrest, founder and chief investment officer of Bouquet Capital Partners. Joining us from Pittsburgh via the Zoom thing. Again, the S&P 500 off 1.5%. The NASDAQ off 2.5%. The NASDAQ in the futures market earlier this morning, when Tom and I started surveillance, was off about 5.2%, so off the bottoms of the day here. Let's talk to a market professional here. Gina Martin-Adams, Bloomberg Intelligence. She's a U.S. strategist for Bloomberg Intelligence. Gina, what do you make of today's market action today?
Yeah, so a few things come to mind. The first is that tech has been very vulnerable to downside shocks. And this really started all the way back in June as sort of capital started to move away from tech toward other themes in the S&P 500. We've sort of held on to premiums in tech, but the premium is shrinking a little bit. As we went through the last two earnings seasons, any sort of negative tech news or guidance was greeted very profoundly negatively. So we knew that there was some vulnerability here. Excess valuations in this space do naturally make it more vulnerable in a period of earnings deceleration anyway. And now we're starting to see that there is a lot of competition. The competitive landscape is going to be a big part of the story going forward. And maybe our excessive optimism was not quite justified. So I think we were just right-sizing expectations at this point in time, and we'll continue to do that through the bulk of 2025.
So then speaking of earnings season, already we were looking at Magnificent Seven earnings to slow. Still growing, but definitely slowing on a year-on-year basis, which left the other 493 stocks to kind of have to meet that earnings expectation on the upside. Where are we in that story?
Yeah, it's a great question and something we definitely have been tracking really closely. So very early on in the earnings season is the first answer. We're just getting started really with earnings, and the bulk of that will come over the next 2 weeks. But The financials really just crushed expectations. They're on pace for a 15% earnings growth bogey versus the expectation for just 7%. So that sector is definitely pulling more than its fair share and helping to offset what is some risk that still exists in the commodity space. Estimates are still moving lower for most of the commodity segments of the index. A lot of volatility in industrials and healthcare has been the story there, and then financials has been the outside surprise. So mixed is the short answer to your question. But we're still looking at single-digit earnings growth at large for the 493, so it's slow going, but better than the declines that we had this time last year.
When you see a move like today on a piece of news that no one even thought of 24 hours ago, does it just kind of highlight that a little bit froth in the market? You know, it doesn't take much to kind of knock you on the side a little bit.
Yeah, I mean, I think the problem with AI themes and tech themes is the concentration problem, right? Yes, when you get pieces of news like this that sort of remind you that it's not all upside to the moon growth for everybody for all times, and there will be a competitive aspect to this business, it does cause a bit of a reset of expectations, but does it really dismantle the theme? The theme is still in existence. It's just the expectations for who wins and loses. Based on that theme, we have to right size.
But to that point, if the U.S. exceptionalism theme is somewhat based on AI,
exactly,
does this suck the wind out of that exceptionalism theme?
Because the exceptionalism was very concentrated in a few names in large cap U.S. as well as European equities. Also a bit of Taiwan and South Korea flowed into this theme as well. But the U.S. valuation premium was so enormous relative to the rest of the markets that U.S. valuations, U.S. exceptionalism are built in some ways on the theme of AI, and more exposure in the U.S. than any other market, without a doubt, around the world. So you do have this vulnerability, again, really related to the concentration. The fact that 30% of the index is tech, and the vast majority of the tech earnings growth outlook optimism was built on the house of AI, does make the U.S. market very vulnerable to any kind of shock that comes up, even if those shocks are not necessarily all major downside risks, and is more about the competitive positioning and kind of the market share growth that we can enjoy from the U.S. versus the rest.
Yeah, and I don't have the answer, but I'm not sure what this means for the whole AI tech spend theme. Short term, as Kim Forrest was saying, maybe not a whole lot since the orders are in the books, but longer term, maybe we'll have an impact.
But like if Meta spends less, like the market didn't like Meta was spending $65 billion. So if Meta spends less, in theory, is that good for Meta?
I think that's good, but why did Meta up its CapEx like 15 minutes before this announcement comes out? I don't understand that whole time. I don't understand. Gina Martin Adams, thank you so much for joining us. Gina Martin Adams, she is the equity market strategist for Bloomberg Intelligence, one of the best on the street. We appreciate getting some of her time here. S&P 500 off 87 points, that's 1.4%. The NASDAQ's off 465 points, that's 2.3%. 10-year Treasury, down 6 basis points, 4.56%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And let me bring you this breaking news because I'm still trying to figure it out. This is a DeepSeek restricting registration to China mobile phone numbers. If you go to DeepSeek's status page, it says, and I quote, currently only registration with a mainland China mobile phone number is supported. If you sign up for their updates, I've been getting them all morning long. Okay. They've been having problems. They said earlier they're investigating an outage that disrupted service and prevented signups after new users rushed to download the chatbot. So take that for what it's worth. I'm still trying to figure it out. Big tech stocks, they are taking the heavy losses today. You have shares of NVIDIA down right now 12.9%. Dow Jones Industrial Average has less emphasis on tech, of course, and that's holding up a lot better, down just 15 points right now. The tech-heavy NASDAQ 100 down 2.3%. That's a decline of 500 points, but well off the worst levels of the session. The S&P 500 right now, 88 points lower, and that is down 1.4%. Amy Wu Silverman at RBC Capital Markets spoke to her earlier today. She sees DeepSeek's impact on the markets this way.
Well, it's possible this paddling duck might have just paddled over a waterfall we're about to see. I think we're a little early. I think there's going to be a lot of digestion today, but there's no question that this could be a potential game changer.
And we're seeing a flight to safety. 2-year yields right now 4 basis points lower, 422. The 10-year yield, that is down by 6 basis points. That is at 456. And the start of the Mag 7 earnings, of course, this week, starting Wednesday, we're going to hear from Microsoft, Meta, and Tesla. Also, the Fed holds its first policy meeting, its latest policy meeting. That'll be later this week. No change expected there. And just to recap, DeepSeek restricting registration to China mobile phone numbers for the time being. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. So head over to youtube.com, search Bloomberg Podcast Live. It takes you right to us, easy peasy, as the kids say. We're trying to get smart here on this whole DeepSeek thing. What does it mean for AI? What does it mean for the chip makers and some of the software suppliers? Big moves in the stock market here. The NASDAQ off 2.2%, was down more than 5% in the pre-market. Angelo Zeno, he's going to help us here get a little bit smarter. Angelo Zeno is the Senior Vice President, Equity Analyst for CFRA Research. Angelo, what's your take on this news we all kind of woke up to that, oh yeah, there's maybe a as good competitor to ChatGPT and some of the others out there, and maybe a much lower cost?
Yeah, I mean, so thanks for having me. I guess first off, I mean, this has kind of been out there for a couple of days now. It's interesting that it's kind of, taken a couple of days, I guess, to kind of really filter with a lot of investors out there. But, probably because it's kind of risen to the top of the App Store for Apple out there, and you've got a lot more eyes on the platform and what have you. But the way we kind of look at this right now is, listen, it's a big deal. There's no doubt about it that you've now kind of got models that are being thrown out there in China that are coming at if the claims are correct, at significantly lower cost and essentially at a performance level that is on par with what some of the leading kind of model makers here in the U.S. Are pumping out. And given that, I mean, I think when you kind of look at how some of the names here in the U.S. have performed here thus far today, I think it makes a lot of sense in terms of kind of the chip names out there being hit among the worst, and given some of the uncertainty about some of the spending levels out there, you need to start compressing those multiples on some of the risks out there. We don't necessarily think there's going to be a big change in terms of the spending levels out there among kind of the big hyperscalers, at least in 2025. But I think they could, as you progress through the calendar year, I think there could be a scenario where as you kind of go into the following year and into 2027, where they're a lot more efficient and kind of refrain from increasing spending levels from current levels, which is why I think a lot of those names are performing the way they are today.
Just on the headline, and you might not have a thought on this, but let me see if you have any idea here. DeepSeek restricting registration to China mobile phone numbers. Does that mean that from
I should point out
yes?
that I've got the original message from DeepSeek. It says important temporary registration restrictions, because I assume they had so many users that something was crashing.
Right.
So it's
which
temporary.
Which also just means, though, that this isn't up to snuff either. It's not going to like displace everything altogether all at once. And the fact that it is a China AI platform too, does that sort of give pause then, in addition to the longer term adoption?
I mean, listen, I think we have to see how this all plays out, right? But a couple of things I think to keep in mind. I mean, listen, this is I think there are a number of storylines that you have to take into account here. But from a privacy perspective, clearly a big area of concern. I mean, I've been telling people, listen, I've downloaded kind of Red Note as well as DeepSeek here in the last couple of days, and they're both on China-based servers, and I can't get my hands on downloading TikTok on a U.S.-based server on the App Store out there. I think you've got a number of privacy issues out there that's going to have to get worked with. We'll see what the U.S. government, if they do anything about that. And as far as kind of whether or not it's an issue, whether these are China-based models, U.S. models, or what have you. I think that at the end of the day, I think you're going to get what this tells us is the competitive landscape is going to definitely escalate. And if you're a company like an OpenAI out there or Anthropic or what have you, those are probably going to be the companies that are most at risk. And then when you start looking at some of the private valuations out there as far as those companies are concerned, I'd personally say that's probably where the biggest risk area is, at least for this kind of AI play out there is concerned.
So, Angela, we're seeing NVIDIA, for example, down about 12.6% today. Broadcom down about 12% today. Are moves like that, are they consistent with the risk that maybe this news represents, or is there an overreaction? How do you think about it?
I mean, the way I think about this is, at some point in time, there were going to be concerns about the spending levels out there anyway. You kind of look at, when this kind of trade really started as far as kind of, the AI, spending trade is concerned. I mean, clearly it started around, 2023. Once we kind of got that OpenAI Microsoft inflection in early 2023, that kind of led the NVIDIA trade first and foremost. Broadcom also has been following suit, and then we've kind of seen a number of other chip makers out there really kind of benefit from this trade. But as the comparisons are going to get a lot more difficult, the growth rates are going to start to slow as is to be expected. And then when you kind of throw this little wrench in there in terms of some of the efficiencies on some of these cost models out there, and the need to maybe potentially not have to upgrade maybe in terms of going from Hopper to Blackwell Ultra later this year to Rubin in 2026. Maybe some of those annual cadences start to slow a little bit, or kind of the trajectory of that starts to slow. And then when you start thinking about the growth rate specifically as we get into 2026 and 2027, I do think there's some risk to that. So I do think, again, the multiple needs to compress, and you kind of need to kind of get back to more historical type levels relative to maybe what you've seen here over the last 12 to 18 months, where the valuations for many of these names definitely got ahead of themselves.
We have about 30 seconds left, but is this a win for software companies, and if so, which ones?
It could be a win for software companies. I think at the very least you get a shift in terms of the money flow to those companies if you're an investor. But we continue to like we continue to like a lot of those cloud plays out there. So a name like Microsoft on this pullback, we would still be big buyers of. A name like a Salesforce, a ServiceNow, stuff like that. We continue to be recommending those names as well. So those are some of the names that we do like on the software side of things.
All right, Angela, thanks a lot. Really appreciate it. Thanks for jumping on. It's a fun day. There's a lot to get through. There's a lot to think about. We appreciate that. Angela Zeno joining us. He's Senior Vice President and Equity Analyst over at CF. RA Research. We're going to continue this conversation about AI and DeepSeek and what the issues are there and what the winners and losers are and what to do and how to think about AI going forward. Josh Pantoni is CEO of Boosted.ai. He will be joining us next. Taking a look at the market, guys, we are off the lows of the session. I'm taking a look at S&P Mini Futures market so we can see that dip that we saw, and we're now down just 1.5%. This is Bloomberg.
Listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
Happy Monday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Also check us out on YouTube.com. We clearly have the tech sell-off underway, really concentrated in certain names. The Mag 7, obviously NVIDIA, the chip stocks, although Apple's up, I should say. But NVIDIA obviously getting pounded, the chip stocks getting pounded as well. So we wanted to continue the conversation about AI, and you really need to rethink this investment thesis. Joining us now is Josh Pantoni. He's CEO of Boosted.ai. Now, the company has helped dozens of investment managers whose AUM totals over $1 trillion and how to implement machine learning in their portfolios. First off, Josh, have you seen this new GeekSeek? Why do I keep saying GeekSeek? It's not GeekSeek. DeepSeek. This is not fair to me. Have you tried DeepSeek? Have you talked to your clients about it? What do you think?
Yeah, so I mean, it came out, I think, last Monday. We've already ran a whole suite of benchmarks against it, tried out a bunch of things, and I'd say we're pretty familiar with it. I think it's impressive in a number of ways. It's impressive how much power you get for the cost. I think the flip side is it's actually not quite something that we could even consider implementing into our process. And I think there's a lot of clients that'll reach the same conclusion after they start working with it.
Why is that?
So a lot of how we help our clients is with things like trying to identify risk and trying to identify, sort of build up these different workflows for different parts of the financial process. And a really big part of that is related to trust. You need to be able to give answers that you're very confident in. You need to give answers that you can sort of deeply intuit where it's coming from. And I think one of the challenges of this model is that it has some very clear political biases right off the bat. So if I'm trying to use it to say, understand what my portfolio exposure is to China, it's going to be a challenge to use it for things like that. Also, a lot of the things we're most excited about are things like being able to do computer use, being able to sort of teach the machine how to like interact with different apps and things on the computer, image recognition, trying to extract out charts and things like that. And a lot of those kind of capabilities that actually doesn't seem to be as sophisticated in. So it can do very well in certain benchmarks, but when it actually comes to trying to apply it for at least most of the use cases that we're doing, it's not quite there yet.
What is there for you right now? Like, what does work?
I think the most interesting thing for me is actually on the reasoning side. So, of course, like one of the really big pushes OpenAI's had right now is like with O1 and O3. You've got these models coming in where, in theory, they can take a task, break it into subcomponents, and then start executing on those components. And I think in that area, it's actually quite good. I also think, just from a cost basis, it's extremely impressive what they've been able to do. There's been some controversy about exactly how much it costs to actually train the model. What I can confirm, though, is the actual inference cost, the cost of running the model, is extremely cheap compared to what you're getting with like O1 and O3. And so just the fact that it's even possible to do that is a major technology breakthrough.
If nothing else, does DeepSeek just highlight the cost issue and potentially the movement down in costs of implementing AI?
Yeah, the way I tend to think about it is the cheaper it is to train AI systems, the more advanced capabilities you can train in the systems.
Looks like we lost your audio. Josh, are you there?
Yes, I am here. Can you still hear me?
We're good?
Okay, perfect. Yeah, the way I like to think about it is the cheaper it is to train these AI systems, then the more advanced capabilities you can train. The more advanced capabilities you can train, the more use cases you unlock, the more use cases unlock, the more you actually see it accelerate. So I actually think this model will probably cause an acceleration in the capabilities of other models that are being built as more folks start to adopt it. So for me, I actually see it as completely positive.
What outside of DeepSeek and other models have you worked with that you did like?
Yeah, so I mean, behind the scenes, we work with Anthropic models, we work with OpenAI models, we work with a bunch of fine-tuned models that we build in-house ourselves. I like to sort of describe it as an orchestra of different types of models. And one of the things we've sort of noticed is there's a lot of differences in capabilities. So something like the Anthropic models tend to be better at very long context window, where you're trying to handle like huge amounts of text. Whereas something like the GPT-4o models tend to be a little bit better at like foreign language and just sort of the general verbiage it uses as it's giving outputs. So we use a whole bunch.
How are your clients in the asset management business, Josh, using AI these days in these early days?
Yeah, so the way I like to think about it is we give them the ability to create this sort of team of little AI workers where you teach them how to do some kind of task, and then they're going to do that task on a continuous basis. So let's say you had to do something like write an investment thesis on a company, or let's say you had to do something like write an ESG report, or let's say you wanted to continuously monitor the world for any kinds of updates to something that might happen in the AI space. These are all examples of sort of workflows you can teach the system and have the system start to automate.
Well, we really appreciate your time. It was so good to get that perspective. It's good to kind of get the user mindset in for this, Josh. Josh Pantoni, CEO of Boosted.ai on DeepSeek and sort of the pros and the cons there. Do you think I'm going to get the name right throughout the rest of the show and TV or no?
Well, I've got it literally on my screen.
On this.
Yes.
Yeah, I have it now written like 47 times on my sheet of paper. So we will see. But I should point out, obviously, we're still seeing that tech sell-off within the market, but we are off the lows for whatever that's worth. But the NASDAQ is still up about 2.6%. And Mike McKee would be so happy that I'm saying this to you right now because he wants to point out there are more up stocks than down stocks in the NASDAQ 100 right now.
Oh,
55
Michael
up stocks,
McKee stepping it
down
up.
stocks 46. I countered and said,
Very
yeah, but look at the weighting. But anywho. All right, now here is an announcement for you. If you're in the U.S., a reminder, you can listen to us via satellite radio on SiriusXM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121, presented by Oracle. Stay tuned for the latest market news and industry research.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. Welcome to the second hour of Bloomberg Intelligence Radio. I'm Alex Steele alongside Paul Sweeney. We have a great hour lined up for you. We're going to kick it all off with Anurag Rana, Bloomberg Intelligence Senior Technology Analyst on the DeepSeek buzz and sort of where the winners and losers are within that. Then we'll continue with Gene Munster, the legend in the industry, managing partner at Deepwater Asset Management, for his take on that. Then we get the broader market with David Kudla, CIO of Mainstay Capital Management. And then we'll go to commodities with Mike McGlone at Bloomberg Intelligence, and then the rates market with Ira Jersey at Bloomberg Intelligence. So we got you covered from all those angles. But let's kick it all off right now with a business flash. And for that, we go to John Tucker.
Let's start with the DeepSeek news. DeepSeek.
Yeah, I got it. Oh, man.
You get it. They're restricting registration to China mobile phone numbers, and this is only on a temporary basis. DeepSeek's been struggling with these outages because of the high demand. As far as the markets, you mentioned, Alex and Paul, we've come off the worst of the tech-led sell-off in the markets. Investor concern about the startup erasing a record amount of stock market value from the biggest company, that would be NVIDIA, down over 13% right now. So that's good for about $465 billion in market cap for NVIDIA. Meantime, Steve Chibarone at Federated Global says, you know what, DeepSeek could ultimately save tech companies a lot of money.
If you're telling me that companies like Meta, Google, you pick the company, if they can implement effective AI without the CapEx, meaning that there's more cash flow, big tech can be returned to shareholders or can be invested in other areas, that's not a bad thing.
Right now, the S&P 500, 101 points lower, down 1.7%. The Dow Jones Industrial Average down just 0.2% right now. And now the NASDAQ 100, again, off the worst levels of the session, but still down 2.7%, a decline of 588 points. Economic data, real brief, the Commerce Department reporting new home sales posted back-to-back gains in November and December. Annual sales also increased. This is from the folks over at the Geological Survey. Magnitude 3.9 earthquake struck southeast of York Harbor, Maine. It was felt in Boston, and we're also hearing from our colleagues, Courtney Donahoe in Westchester, in Pelham. She felt it. Okay. It was pretty significant.
Interesting.
Evan's home from school today, and Evan, because he's sick, and he said his chair rocked back.
Wow, okay.
Well, then it's first-hand real account now.
That is.
Yeah.
Excellent.
It's kind of scary, though.
People in California, they're like, no big
They're like,
deal.
oh, it shook a little bit?
Yeah, no big
Try
deal.
the mudslides and the fires and the earthquakes.
Yeah, exactly. John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Head over to youtube.com, search Bloomberg Podcast Live. Takes you right to us. As John Tucker is just reporting sell-off in the market, let's see where the action is under the hood. We go to Isabel Lee, Bloomberg News. She follows the markets for us. Isabel, what are you looking at?
So John brought up NVIDIA, and it's still down. It's down more than 13%. That's a session low. Broadcom also down to session lows 14%, and Marvel 15%. So NVIDIA may have bounced back a little bit, but not these stocks. I was reading a note about earlier from Peter Cheer of Academy Securities, and he said everyone talks about Black Swan, but no one talks about Gray Rhino. And I had to Google Gray
True.
Rhino.
What does that mean?
It's an event that's likely to happen, but is often ignored because it's obvious. And we've had a lot of notes this morning saying, did we really think this would never happen? I mean, it talks to about NVIDIA's reputation and NVIDIA being king and also the US exceptionalism, but that really made me think. I never thought of Gray Rhino.
I definitely did not think about that. But chip stocks staying down in some ways makes a lot of sense because will they make less money for their chips or will there be less demand, et cetera? What other areas of the market are you watching?
There's also power stocks. Constellation Energy is down. NRG is down. Of course, they're sliding on fears of weaker electricity demand from AI data centers. But what's up is Merit Interactive. It's based in China, and it has some of the clearest links to DeepSeek. Alex,
oh, it's spreading.
It's spreading. It's catching.
It's just there's so many E's. Anyway, go ahead.
Yes, so I mean, obviously, where there are losers, there are winners. But I don't know. I mean, maybe this is a Gray Rhino. Maybe it's a Black Swan. Maybe it's just a one-day thing. Who knows?
Who knows? And I think that that's the point. We're all trying to figure it out, right? Is it a buying opportunity or is this sort of a meaningful selling opportunity? All right, Isabel, thanks a lot. Isabel Lee joining us, Bloomberg Cross Asset Reporter. Obviously, this is having an impact across all assets, right? Look at the dollar, you look at treasury yields. But let's keep more on this with Anurag Rana, Bloomberg Intelligence Senior Technology Analyst. We were discussing this earlier, and I'm wondering, is this a good thing for the software stocks? Because maybe their input costs will then be less, and that's why, like, Salesforce is up like 3%.
Yeah, I think that's a very good point. If you look at not just Salesforce, Adobe is up 2%, Workday is up almost 4%, ServiceNow 3%. So I completely agree with that because if, say, for the sake of argument, in the short run, we see a drop in LLM cost. Right now, for example, even for Microsoft, the Office Copilot, it's priced at like $30 per user per month. They changed the pricing recently on a consumption-based also, but you're not going to see people signing up for that expensive of a plan. If there is a reduction in pricing, you can see more and more of those Copilots being embedded in the software industry. So I completely agree with that thesis.
Anurag, do you think users, whether they're individual users or corporate users, would they use a Chinese AI product, do you think?
Oh, no, absolutely not. I'd be very surprised if anybody in the enterprises would let them even install that in their networks. That's just not the way I look at it. But you think of this as a broader impact on the entire concept of what's happening. The current, prior to today, the real thesis was that in order to train these models, you need billions and billions and hundreds of billions of dollars. Now, by the way, we still don't know if that's true or not. But this